all of you today. My name is Silvia Bugelli, and I serve as the Executive Legal Director at B3, the Brazilian Stock Exchange. And on behalf of B3, I would like to welcome all of you to Capital for Climate, Harnessing Taxonomies and Interoperability, an opportunity to discuss the principles and concepts of the Brazilian Sustainable Taxonomy, interoperability, and to explore experiences from other markets around the world. This event is a collaborative effort between B3, CVM, the Securities and Exchange Commission of Brazil, CNMV, National Securities Market Commission of Spain, IIMV, Instituto Ibero-Americano de Mercados de Valores, and supported by the Task Force on Net Zero Policy, Climate Bonds Initiative, Principles for Responsible Investment, and UNEP-FI. We gather today to discuss a topic of profound importance, sustainable taxonomy. I consider this moment as very special because it's a celebration, a moment of celebration and a moment of reflection. We organized this event to promote and debate the Brazilian sustainable taxonomy, led by the Ministry of Finance of Brazil and supported by CVM and other important agents of the Brazilian and global market, including civil society and the private sector. The Brazilian sustainable taxonomy aims to classify economic activities based on their contribution to climate, environmental, and social objectives. Its strategic goals include mobilizing public and private capital toward activities with positive environment and social impacts, fostering technological innovation for sustainability, enhance productivity and competitiveness, establishing reliable data foundations for sustainable financial flows, promoting transparency and long-term vision to support capital drivers, investors in their decision-making. This taxonomy, as all of you know, is uniquely tailored to Brazil's reality. It incorporates our rich biodiversity, clean energy matrix, and social challenges. It is designed to combat greenwashing, align Brazil with international sustainability commitments, prevent environmental barriers in export and international investments, strengthen Brazil's leadership in the transition to a green economy, leveraging investments and new products. I must say that the Brazilian Sustainable Taxonomy is the official instrument for guiding investments under the Federal Ecological Transformation Plan, as reinforced by a recently published federal decree. Regulatory bodies are also stepping up, having CVM's pioneering regulation on disclosure of financial information related to sustainability and Brazilian Central Bank's sustainable agenda, and recent measures on the subject include rules on dissemination by financial institutions of information on risks and opportunities related to social, environment, and climate aspects. At B3, we are very proud to join our market partners on this transformation and committed to support all the necessary infrastructures to these important developments can be embraced by the Brazilian capital market at the speed and to the extent to the market needs. Our purpose here at B3 is to drive sustainable economic development for society to thrive. We do this, among others, by offering ESG index. We have more than 9 indexes on ESG matters. Launching the B3 Green Equities designation for companies contributing to the green economy. Operating platforms for registration of carbon credit and other financial assets. Operating ESG Workspace, a platform for collecting, storing, caring, and analyzing environmental, social, and corporate governance data. B3 has also implemented the ESG Annex in our issuer regulation, requiring listed companies to have at least 1 woman and 1 member from an underrepresented group on their boards. This comply or explain model promotes diversity, transparency, and accountability. We also promote financial education through initiatives like Bora Investir, B3 Educação, and Hub B3, empowering individual investors and aim to democratize access to the capital market. Looking ahead, Brazil is preparing to host COP30 in Belém. This is a historic opportunity which brings together leaders and representatives from around the world to our country. Time is right, and alignment with global sustainable finance standards will allow access to more robust credit lines, and new markets. Promoting and encouraging sustainable practices is not only an ethical choice, it's more than that. It's a smart strategy. At B3, we are committed to engaging our stakeholders and encouraging best practices in the market by offering products and services that support our clients in the transition to a resilient and low-carbon economy. Thank you very much for joining us on this mission. Now I would like to invite to the stage Otto Lobo, Acting Chair of CVM. Please, Otto.
So good afternoon to everyone that came from near and far today. Thank you for joining us in this very important program. I'd like to make a special thanks to B3, Silvia and the team, also the speakers that will make presentations today, the panelists, representatives from the government, finance, industry, and all the participants, the folks from the news, the journalists that are here today also. Just a very brief intro. CVM's role as security market authority, CVM, we regulate the securities market, we ensure compliance with regulations, we protect investors, we oversee market operations, and our responsibilities include setting rules for trading, enforcing compliance, and providing guidelines to investors. It's important to mention that CVM was, to my knowledge, one of the first regulators in the world to approve a special regulation, resolution 193, even before the IFRS 1 and IFRS 2 compatibility with Brazilian regulation has been finalized, establishing the disclosure date, format, and target audience for these obligations. So CVM is in the forefront in terms of information and criteria and standards and disclosures. I also like to mention that this gathering today takes place in the, as Silvia has mentioned, takes place in the lead up to COP30, at a time when alignment financial systems with climate and sustainability objectives has moved from aspiration to necessity. Our purpose is not merely to discuss taxonomies in the abstract, but examine how they can become concrete instruments for redirecting at a scale in line with just, credible, and science-based transition. The question as to why taxonomies matter, it's important to mention that over the past decade, sustainable finance taxonomies have emerged as one of the most effective tools for defining what constitutes a truly sustainable economic activity, not through rhetoric, but through measurable, verifiable criteria. They help safeguard market integrity by reducing ambiguity and greenwashing risk, while offering investors clarity, comparability, and confidence. By doing so, they enable financial flows to move in the direction required by Article 2.1c of the Paris Agreement towards low emission and climate resilient development pathways. Brazil's role in the global conversation. Brazil is one of the world's most dynamic emerging economies and a steward of critical natural capital, occupies a strategic position in the global sustainable finance debate. The development of a Brazilian taxonomy is not an isolated initiative, but part of a broader economic strategy that integrates climate ambition, industrial transformation, and social development. The country is also committed to contributing to global convergence, ensuring that domestic progress strengthens rather than fragments international market standards. The launch of the Principles for Taxonomy Interoperability. A central milestone of today's event is the first public presentation of the Principles of a Taxonomy Interoperability, developed through a unique partnership among leading global institutions. These principles are designed to support coherence across jurisdictions, not through uniformity, but through shared foundations, scientific consistency, and transparency. Interoperability is not a technical choice. It is a precondition for unlocking cross-border investment and accelerating climate finance in emerging developed markets alike. The agenda for today, our program reflects this ambition. It brings together voices from government, supervisory authorities, multilateral bodies, financial intermediaries, corporate actors, and reporters. This discussion will move from global case studies and regulatory design to the practical experience of asset owners and companies, and finally to the microeconomic risks of delaying climate action. The structure is intentional to show that taxonomies are not theoretical frameworks, but operational levers for economic transformation. In closing remarks, we hope today's exchange will strengthen cooperation, accelerate action, and support the development of credible and aligned sustainable finance frameworks. With that, it is my honor and privilege to officially open the event and wish you all a productive afternoon. Thank you.
Thank you very much. My name is Margarita Pirovska. I am PRI's Director of Global Policy, and I have the pleasure of facilitating today's event. Thank you very much, Otto and Sylvia, for your opening comments. So to begin our event, I would like to invite Nathan Fabian, PRI's Chief Sustainable Systems Officer, to do a presentation on the new principles for taxonomy interoperability.
Hello everybody, it's great to see you here. It's a wonderful event for those of us who have been working in taxonomies for many years, to see the enthusiasm in Brazil for this tool, but of course the promise or the potential of aligning capital market flows with sustainable development objectives. And so it's my great privilege to be here with you after working on some of the taxonomies around the world and support your work. So my role is to share some more information on the interoperability principles, where they came from, and hopefully what we're going to use them for. Now we have some slides, which I apologize for, but I hope you'll find them useful. So you can see the first already. There we go. The principles came from an effort at COP29, where there was recognition that taxonomies were going to be a critical tool for allocating finance to sustainable development. And there was the launch of a roadmap for advancing interoperability. Now this word, interoperability, basically it means making it easier to compare things. This is really what we're talking about. And so with now over 50 taxonomies around the world, we need to make it easier to compare them. And that's why we have these principles. You'll see that there were 13 partners, as written on the slide. The founding partners were the Central Bank of Azerbaijan, the International Finance Corporation, the Sustainable Banking and Finance Network, the UNDP, or the United Nations Development Programme, and the International Platform on Sustainable Finance. So these are thoughtful, robust institutions or groups that are working on sustainable finance, and it gave us an excellent start. And of course, Brazil came in to join this group so that we could carry the work forward into COP30. And we must remember that this work contributes to the UN framework, which has an explicit objective to facilitate cross-border investment flows in sustainable activities under Article 2.1c. So this is an example of the market and of our regulators working together to implement that provision. And the focus areas under this roadmap were three. Identify a common core set of taxonomy economic activities, particularly in emerging and developing markets, creating standardized approaches for alignment with taxonomy principles, and formulating common approaches to finance the transition through taxonomies. So here we are today at the third box on that screen. We are going to share the principles that are going to support our interoperability efforts. Now, you may have seen many of these maps over the recent years, and the good news is every time you look at one, there's another country coloured in. It's been a fantastic spread of taxonomies around the world. And we tend to talk about those that have been adopted by governments and those that have been initiated by the private sector in the same discussion. And that is because the relationship between private actors and governments and regulators on these tools is so critical. And so these are valuable approaches wherever you start from. Both dimensions matter. And so this is why we present both of these together. And you see the existing ones here and those in development. And in development often means working with the private sector to get these taxonomies designed so that markets know what they're getting into. So it's a great way that we're working together. Now, I think everyone knows what a taxonomy is, but just in case, it's a classification system. So it's a list. Scientists have been using them for hundreds of years to classify things like insects and trees and all sorts of things. The point is, it's a list and there's some criteria. And so for us, it's a list generally of economic activities with some criteria that describe a level of performance that meets sustainability goals, like on emissions reductions or on protecting nature. And so it only makes sense that as markets grapple with meeting goals, that they have tools that tell how to meet those goals, by what level of performance, especially because these things aren't always easy to price well. And so this is why we have them. So over 50 taxonomies, national or regional. I think even there's a more ambitious number of 60 that's often used in the past week, under development around the world. So it's really progressing very impressively. So our intention is simple, that these 50 taxonomies and all the ones that come in future can learn from our principles of interoperability, and so that the users of taxonomies understand how they relate to each other. And what that means in practice is that if I'm looking at economic activity and a criteria in one country, I can be fairly confident that it's used a similar way of being developed and how it compares to a criteria in another country. Because some things vary between countries, like the emissions target, for example. The starting point on which sectors should be covered and which ones should not, the most highest priorities. And so there's enough moving parts in this world in practice, so we need to make the taxonomies as simple as possible so we can compare the criteria. And that way markets can use them, because capital is global and we want to manage the costs and make sure there's trust. And so that's why we need to use this interoperability approach. And so the principles will help with design, with usability, with implementation, with adoption. And that's quite ambitious, I've got to say, for one set of principles. But I'll read them out in a moment, and you'll see that there's a real attempt not to just give you a technical set of guidelines on how to do this, but to think about how a taxonomy can be adopted and used, and how this interoperability can grow. And I think that's what's special about these principles. All right. What are they and what are they not? So they're voluntary. We're always very careful to use that word with taxonomies these days. Very important. They target taxonomy developers. So if you're trying to implement or support the adoption of a taxonomy, these principles are for you. They're flexible, so you can make choices. They're high-level considerations, but if you follow through the logic, it does lead to certain types of practices. Ultimately, of course, it's to help channel sustainable finance. And let's be honest, this is a relatively new tool for finance, and we're learning as we're going. And so having a base of principles that represent our best understanding can help us learn and grow and make sure that we're all using a similar reference point for how we develop our taxonomies. Now, this list on the right-hand side, if you've been involved in taxonomy development, you will have seen a list like this many times. Not prescriptive, not necessarily endorsed by everyone who's using it. These are our caveats to protect us so that markets and governments can have their space and know how they're going to use and adopt. Okay, so this is, if you like, the opposite approach to ISSB, where you have one standard that you want adopted with as little variation as possible. Everyone's economy is different. Everyone's stage of development is different. Everyone's economic mix is different. And if we don't recognise that context and allow that local focus, where the taxonomies won't work. But we've embraced that with taxonomies. It's one of the strengths of taxonomies. And so this is why we present it in this way, but it's also why the principles are so important. And you can see the others. So here's a nice summary of the principles. And I would encourage you to pick up the document and have a look. There are some key elements here that I'd like to quickly draw on before I close. So the first one is drawing on the jurisdictional, environmental, economic and social priorities, as I just said. That means some jurisdictions develop criteria for different sectors. And that's exactly as it should be, we think. Also, there are some really good principles out there, detailed design principles, like from the G20, that can be used. And this is what the first one's all about. The second one is focused on design and identifies what I think are essential components. Sector classifications, specifying clear objectives, having screening criteria, using minimum safeguards, using transition approaches. These are the functional components of taxonomies. Now, on this one, if we can keep it nice and similar, interoperability's got a real chance. It's only when we really change that basic framework that markets start going, I'm not sure how to compare. So that one's quite important. Number 3, and this is where we start to getting to how the market uses it. Define use cases and users in the development and review process. So this objective of knowing who will use a taxonomy, for what and how, makes sure that we design it in a way that it can be adopted. And we learnt this in Europe, that we wish we'd started earlier, I think, on this part. And so everyone else can benefit from this experience of doing the usability and the design at the same time. Of course, it matters especially for groups like small to medium enterprise, where we need to think very clearly about the impacts and how they'll benefit. Number 4, regularly review. And this is a principle that recognises that we're at different stages of development. Some taxonomies are quite mature, many are new, and so we hope that we can have a process of continually observing each other's work and learning and refining and growing together with these taxonomies, and this is what number 4 is about. Number 5, science-based criteria, I think. We say reduce complexity. I think really we're saying have a basis in science so that there is high trust, and ultimately as the criteria are better understood and markets get better at dealing with science-based criteria, we'll build a good base of understanding. Number 6, foster market ownership is how I've got it here. Yeah, foster market ownership. So even when you start with a regulatory approach, we know that there's still a reliance on market actors to do a lot of voluntary work, to learn a new language, a new skill, and to start to converse with the other actors in the system and start to work out how to use these in practice. So it's essential, even if you've got a regulatory starting point, to have a good dialogue and working spaces. And there are some wonderful models around the world. On this one, I'd identify my own home country, Australia, which has an excellent fostering market space. And you can observe that if you wish. And then the last one, join the collaborative efforts like this. The collaborative spirit on taxonomy development, I think, is one of the strongest features of the sustainable finance work around the world. An excellent community with a good, clear vision, and there are many spaces, including now around these principles, that we can work together to refine these tools, and of course focus on the main objective here, which is getting the capital to sustainable activities for a sustainable economy. Thank you all.
Thank you, Nathan. Now to begin the discussion, let's dive with the first panel. I would like to invite to the stage the moderator, Helena Vines-Fiestas, Commissioner of the CNMV, the National Commission of Financial Markets of Spain, and co-chair of the Task Force on Net Zero Policy. Helena will be accompanied for the discussion by Dr. Ma Jun, founder of the Institute of Finance and Sustainability of China, also representing the International Platform for Sustainable Finance, Cristina Reis, Secretary for Carbon Markets of the Ministry of Finance in Brazil, Maria Coppola, Commissioner of CNV Brazil, and Nicole Yazbek Martin, Executive Manager of the Australian Sustainable Finance Institute, and Maria Paz Uribe, Principal Funding Officer, Debt Capital Markets and Derivatives of CAF. Thank you.
Now, second time, good one. Bom dia a todas y a todos. Good morning, good afternoon, good evening for those of us who are watching us from the other side of the Atlantic. It's a real pleasure to be with all of you today. And I really want to welcome you because today we're going to embark you on a journey through the world's taxonomy. We're going to go from Australia to Brazil, from Brazil back to Australia, stopping in Europe, in China, and obviously we are going to also look at some of the developments that are happening on regional attempts for creating a common framework. And we're very pleased that Maria Paz is going to represent the efforts that are happening in Latin America, and Mayun, who is also working on a common ground taxonomy with different jurisdictions, and you will tell us more about that in a minute. And I also want to tell everyone, or for everyone to be aware of the privilege that we all have here today, because we have some of the minds and the brains, the architects of taxonomies across the world. We have Dr. Ma, who was the architect of the Chinese taxonomy, Nicole from Australia, Cristina and Marina from Brazil, and I hear that we have other of the architects in the public, so welcome. We also have representatives in the audience from Canada, and we have a few from Europe as well. So it's going to be a really fascinating journey. But before getting into the nitty-gritty, and believe me, when you talk about taxonomies, that's a lot to talk about, I want to ask you a couple of questions, Cristina, because we just heard about the principles of taxonomy interoperability. You've been one of the leaders on the promotion of the initiative, but also of the principles. So I wanted you to please share with us, what are your plans, expectations of the principles in terms of this COP and beyond, but also about the roadmap initiative that Nathan was telling us about. Thank you.
Thank you. Good afternoon, boa tarde, buenas tardes. It's a real pleasure to be here. Actually, I have so much to say, and to look to you in this week, we have to celebrate a lot, because really the world, and Brazil in particular, is doing something great regarding the pre-COP and the COP. So, and we are all here together. We have this community that are designing, developing, and implementing taxonomies, and we all know the importance of taxonomies on really changing the way that investment flows are being applied, right? It's so nice to hear you, Nathan. It's an honor to have you here, and all of you here in São Paulo at B3, at the heart of São Paulo City, to talk about this subject. It's like, it was impossible some months ago when I told Matthias, who works with me in the taxonomy, and well, we should try to talk to those guys of the taxonomy roadmap from Baku 29 and see if they want to share what they are doing and how can we promote these interoperability principles as a priority of the Ministry of Finance at COP30. And then now it's reality. And the principles were just presented. They are very comprehensive. They are very strategic. And every word I can say, and Bridget Boll can say it better than me, was very, 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 very discussed. Right? Every word, as in the taxonomies in general, we know that all lobbies and interests are fighting in relation to the taxonomy criteria, and it's our responsibility to find the right balance and then to really achieve the interest of the majority of people, of the societies in general, and in this case of many, many, many societies. And what the principles bring here is that we can and we should strive for, as I said, channeling the investments towards these sustainable activities and sustainabilities. And sustainable development is a sovereign choice. This is the principle number one. And we need to understand how each country or jurisdiction or region is building their taxonomies, because they are really thinking on what they need to do to transform their economies, their societies, and to, of course, protect, regenerate, and conserve the nature. And so the taxonomies have different scopes, they cover different sectors, they balance differently social, economic, environmental, and climate goals. They have different safeguards, and we need to value all these initiatives and really, as Nathan said, to make them comparable, to find the interoperability, to try to design a common structure so that investors and the society can really see how they are connected. And so I have the pleasure to say that during the summit in Belém now, the principles that we call super taxonomy, just as a nickname, a dear nickname, to not say interoperability of taxonomies all the time. And I think we can make like shirts. We were making a joke of these T-shirts with a big T, like super T. It's gonna be the super taxonomy. And this is gonna happen many events in Belém related to the super taxonomy. And the Ministry of Finance is really pleased to do so in a week when the Brazilian taxonomy was released, and also the decree that sets the voluntary implementation usages of the taxonomy. So it's a very happy week for us. And the thing that makes me happiest is that to see you here in São Paulo, in Brazil, and with this goodwill to really promote taxonomies, because we all see how important they are. Thank you very much.
Thank you, Christina. Thank you so much for not only all the work and leadership you put into the super T, right? The super T, I really, really like it, the super taxonomy, but also for welcoming us, for hosting us, and for this great COP that just started. With that, we're going to start moving back to the origins of taxonomies. And what we're going to do is going to very quickly look at the differences, purposes and structures and key features of the different taxonomies that we have represented in the panel. And I'm going to start with you, Dr. Ma, for one obvious reason, because what many people do not know is that the first green taxonomy was actually the Chinese one, and it was China back in 2015, right? It was the Bank of China who published the Green Catalog, which was then, known ever since as the Chinese taxonomy. Dr. Ma, I want you to explain us what was your thinking then, but also how has it evolved, the taxonomy? Because I know that your taxonomy, we've been, we've known each other for a while now, has evolved quite a bit. And I want you to share with all the audience, how it has changed, and why. Thank you.
Thank you. Thank you very much, Helena. We've been talking about that just 2 hours ago in another session, and now very glad to be part of this discussion. And actually, big congratulations to our Brazilian colleagues for launching the your taxonomy, and also big congratulations on the interoperability principles. Now, back to China, that was 2015 when I was in the central bank as chief economist. By the way, the former name of the Chinese central bank is People's Bank of China. Bank of China is a commercial bank, and People's Bank of China is a central bank. So as a chief economist in the PBOC, I was leading the drafting of a green finance guideline, and within which there is a section on launching a green bond market. And we decided that we needed a taxonomy to define what activity can qualify for green bonds. But at the same time, we have other groups working on green loan taxonomy. And the reason that we decided to have a taxonomy is that it's a low-cost way of labeling green bonds and green loans. If you use only principle-based approach, it may work in the economy of a few large companies. A large company can afford to pay a consultant $500,000 and using the principle-based approach to sort of prove that the activity is consistent with all the very vague principles. But if you do transactions as much as in China, I think we estimated we have 1 million green finance transactions per year. And it's just too costly to having consultants working on each and every transaction for labeling. So having a taxonomy, which is a list of green activities, giving to the banks, and they can immediately recognize the majority of these in the list and mapping with the documentation with the submitted by the companies, then the labeling become much, much cheaper. Of course, they could do some, internal auditing, external advisory, but it's much lower cost than otherwise. So that was the main reason why we adopted the taxonomy approach. So in China, we published the first taxonomy in 2015, and immediately we begin to use that. And we use that on a mandatory basis, which means that we require all the green bond issuers, you have to use the taxonomy to label your green bonds. And for the green loans, which relies on another taxonomy, we ask every single bank, you have to label your green loans using our green taxonomy. And afterwards, we realized there's a benefits of that mandatory usage because we are able to compare the green performance of the companies which issue the green loans, green bonds, and utilizing green loans in terms of green financing percentage of total financing, and we can compare the bank's performance in terms of green loan ratio. Right? If this bank has a 20% green loan ratio, which is green loans as a percentage of total outstanding loans, 20%, that's a good one. This bank 15% is okay. This bank is 10%, it's not very good. 5% is a very shameful number. And by presenting the comparison of the green loan ratio, it itself becomes an incentive. It doesn't cost the government a penny, but it's an incentive to boost, their activities and the internal allocation of resources for, greener financing. And also, later on, we figure out it become a basis for government allocating fiscal incentive. For example, in some pilot cities in China, like Huzhou City, they allocate green loan interest subsidies. For every single green loans labeled as taxonomy aligned, they get an interest subsidy. And on average, it's about 20 basis points now. It used to be 50 basis points. So these are the very powerful usage of taxonomy. And of course, the reporting itself, how much green loans I have, how much environmental benefits like carbon reduction deliver is also used for PR, for disclosure purposes. And let me give you the Huzhou experience, which they used that as an incentive basis. And Huzhou City was able to grow their green loans at 40% every year in the last 8 years. And now, entire city has a green loan ratio of 34%. And the emerging market average, where statistics are available, is about 3 to 4%. And I think it become a very, very powerful driver for resource allocation towards green and sustainable activities.
Thank you so much. It's really interesting because in Europe, what it motivated us to develop a taxonomy was slightly different, even if the ultimate goal was the same one, which is to mobilize capitals towards sustainable investments. And the most immediate goal was to deal with greenwashing within the market, because in Europe there was quite a big, green fund and green bond market, and we had identified that the number one barrier for even that market to be even greater and to really, really boost was fears of greenwashing. So we thought, by creating a common language, that is the reference point, a little bit, but like the daily intake, recommended daily intake in food products, we will really help to boost the market. So if you commercialize your fund as having green characteristics, environmental characteristics, or an environmental objective, then you needed to report, how it relates to the taxonomy. And that's how, at the origin, what motivated, the development of the taxonomy. Now, the other thing I would like to say is that the taxonomy from the very beginning, the European one, was slightly more complex, right? And longer. At the very beginning, the starting point was we look at the 6 environmental objectives that were the part of the overall European environmental strategy for each one of the objectives. So not only mitigation, we had clear targets. For example, when it comes to circular economy, by 2030, it's to double the circularity rate to 24%, and we translated that into the criteria. So the substantial contribution part was how you contribute to those objectives with the do no significant harm. That's meaning as long as you don't harm the rest of the environmental objectives. Now, Marina, I would very, very interested to know what motivated Brazil to, develop a taxonomy. What was your objective, and what is the structure of the Brazilian taxonomy?
Thank you very much. It's a pleasure to be here. I do have to say that I am not the architect of the taxonomy as far as CVM is concerned. That is entirely the responsibility of our head of division, Nathalie, who's sitting over there, and who schools me every day about these issues. She sometimes has to draw them for me, but she's doing a good job in explaining. But I will be involved in the second phase, which is the monitoring and reporting, much more closely associated with this. So when we talk about taxonomy, we're essentially dealing with a problem of translation in the semiotics sense. We are ascribing meaning to expressions that can be interpreted in various forms by different countries and different people within the countries across industries. It's a really big challenge, and it's quite amazing. I imagine when Dr. Ma came across this at the very beginning, issuing with the problem of green bonds. When you think about it, this is a really big challenge. What motivated Brazil to move towards a taxonomy, it has to do with a lot of what has been said here, but I would add another element. So yes, it does have to do with cutting costs, because at the end of the day, that's what Dr. Ma is saying, right? If you have criteria that is objective and easily accessible and understandable, that makes the whole thing much less of an alchemy and much more objective as to, to measure, and so that participants that are not as fluent in this language as Natalie, for example, can have access to it in a much simpler fashion. It has to do, obviously, with trying to avoid greenwashing, which at the end of the day is a form of fraud, which is a big concern for market regulators and central banks. But I do think that in Brazil we are also specially situated. We're a country, we have a vocation for sustainability. Just as a reason of what we are geographically, what our main industries are. So we have every interest in having a language that is common and that can be spoken fluently across the industries. So it goes very well with what I think is our vocation as a country.
Thank you, Marina. Nicole, could you tell us about the Australian taxonomy, please?
Great, thank you. And it's such a pleasure and a privilege to be here with all of you on the stage. It was one of the great privileges of my life so far to be able to lead the development of the Australian Sustainable Finance Taxonomy, and a great passion. And it's fantastic to be in a room where other people feel the passion, because it is a niche area when you're talking at a family barbecue. But exactly. But I think one of the unique aspects of the Australian taxonomy, it was a true public-private partnership. So we, the Australian Sustainable Finance Institute, representing industry, drove the push to develop the Australian Sustainable Finance Taxonomy, and then we were very privileged to partner with the Australian Treasury on the development of that taxonomy. They played an oversight role, but the engine room of the development of the taxonomy was actually driven by industry. I think very similar to other panelists, we had sort of three motivating objectives. So the one is absolutely the mobilization of capital. We have a significant decarbonisation journey ahead of us. We have a massive new future green opportunities that need to be financed, and we know that that finance is going to primarily come from the private sector. And then, of course, that transparency and stamping out greenwashing is crucial, because we need to level the playing field. Otherwise, those that are driving sustainability are at a disadvantage. And that was really acutely recognised by Australia's regulators. And so they were very encouraging and played an oversight role as well, because they saw the taxonomy as a key tool to help combat greenwashing. But I think another objective that hasn't yet been mentioned on the panel is that, Australia is open for business, right? And we really saw the Australian taxonomy as a key mechanism to communicate to the rest of the world where the green opportunities are, particularly in our sectors where we have a strong comparative advantage and where we want to see green growth in the future. And so for all of those reasons, there was a lot of motivation to develop the taxonomy. So we had 4 guiding principles in the development. It was credibility, usability, interoperability, and then prioritizing for the impact of climate mitigation and supporting Australia's green exports. And that helped us to identify 6 key sectors, including 2 sectors that had not yet been done by other taxonomies in a comprehensive way. So the one was mining, metals and minerals, and the other one was very comprehensive criteria for agriculture, because we are a large export industry. And then we, like yourselves, and in the spirit of interoperability, we drew very, very heavily from the European taxonomy. So we have 6 environmental objectives. They match up well. We've defined those objectives and linked the outcomes to the Paris Agreement, to the Global Biodiversity Framework for environment and for ecosystem protection, to key targets for transitioning to a circular economy, and then defined our technical screening criteria according to that. We have a do no significant harm, and then importantly, minimum social safeguards. And again, where we really stepped out in front is very important to Australia's local context is the recognition of First Nations rights and cultural heritage, and so we embedded that in our taxonomy as well.
Thank you, Nicole. Maria Paz, your work on taxonomies has been slightly different because you're helping to develop a common ground framework for sustainable taxonomies within Latin America. Can you tell us more about the work you're conducting, which countries you're working in and supporting?
Sure. Good afternoon to everyone, and thank you for inviting me. So the Latin American and the Caribbean region has an investment gap of $750 trillion. This represents roughly 16% of the global investment gap. Yet, only 6% of climate finance comes to the region. So we, as a development bank of Latin America and the Caribbean, feel that we have the objective of increasing this mobilization towards the region. So mobilization is one of the most repetitive concepts today, but that's why we feel we need to help all of our shareholder countries develop or strengthen their taxonomies. Because this is one of the largest challenges, why money is not flowing towards our region. And we feel transparency, standardization, best global practices are one of these challenges. So taxonomy comes as a natural answer to these challenges. We need strong taxonomies, and we need to speak the language of the interoperability. So I think the common framework for the Latin American taxonomies relates a lot with what PRI just presented earlier. We're trying to develop these common principles that can be used by all of our countries. So when an investor from Europe or from another country comes and wants to invest in our countries, can understand and can feel safe that these are international accepted principles. So the benefits have been largely spoken of. It's hard to be the last one to talk, but I think we agree with most of them. So I think this is cost effective. We're actually reducing costs of the investors when they want to participate in our projects. We're aligning them with all the market standards. We're fostering transparency from our region. And it's also very important to mention that this common framework also bases on the G20 principles, also has lots of common groundworks with the EU taxonomy. So we're trying to include the significant contributions that do not significant harm. There's been, as it was shown earlier in the map, lots of countries now from Latin America and the Caribbean that have already in place frameworks, other ones that are working on them, but as a good examples, we can mention Colombia, which was one of the first ones, Mexico, Chile, now recently Brazil. Peru is undergoing, and we're hoping they publish it soon.
Thank you so much. One of the commonalities of taxonomies is that nobody is requiring anyone. There's no imposition of you have to invest in A or B. Yeah. However, both in China and in Europe, there are some mandatory requirements attached to the taxonomy. Dr. Ma, could you tell us about the mandatory requirements within China?
Are you talking about in terms of the usage?
Yes.
Yeah, which part is mandatory? For example, on the green bond taxonomy, we require every green bond issued in the market to have this green bond label. And this green bond label has to be provided by third-party verifier rather than self-declared. And then after the issuance, they have to report on a regular basis, I think on an annual basis, the actual use of proceeds, rather than just reporting the planned use of proceeds. So these are the few requirements on the green bond side in terms of usage of the taxonomy. On the green loan side, number one, every bank has to report all green loans against taxonomy. on a regular basis. I think on a monthly basis in sort of internal reporting and on a quarterly basis in a formal reporting to the regulators, including the central bank and the banking regulator. And they have to report not only the amount of green loans they extended every month and cumulatively in terms of outstanding, but also the environmental benefits, meaning you tell me how much carbon you have reduced with this amount of green loans, how much, for example, air pollution measured by CO, measured by NOx and SOx you have reduced, how much COD you have reduced in terms of water pollution reduction and so on. So these are the environmental benefits that have to be reported. Then there is an auditing process, which checks on the greenwashing risk, which is the bank. They have internal auditing, which is this sort of a team dealing with the clients. You put a label first, then they have internal auditing to check whether this labeling is accurate or not. And then they submit to the bank's headquarters. Then bank headquarters will submit to the central bank. Initially submitting to the central bank's local branch. The local branch will take a look, then it's submitted to the provincial branch will take a look, then finally there's a check from the central banks, the national headquarters. So at each level, there could be intervention in terms of figuring out which labeling is inaccurate or maybe false, and they will be asked to correct these mistakes. So these are the mechanisms which are put in place, I think enabled very effective prevention of greenwashing on any significant scale.
Thank you so much, Dr. Ma. Very briefly, I wanted to share with all of you the mandatory requirements within Europe. In Europe, we had a slightly different approach in the sense of what is mandatory is for companies to report, against the taxonomy from a revenue perspective. So which percentage of their revenue, is generated by economic activities that align with the taxonomy. So giving investors a picture of where companies are today, and on the other hand, what is the percentage of their capital investments, capital expenditures, CapEx, that is aligned with the taxonomy. So giving a picture to investors of where they're heading towards, right? What is the direction of travel of that company? Now, what is really interesting is that the moment that the companies started to report on the percentage of sustainability of their activities, actually the taxonomy became a common measurement tool, right? It allowed for consistent measurement across the board. And what is really interesting is that we didn't stop there. Then we said, okay, all the financial products that claim to have environmental characteristics or an environmental objective, they also have to report the percentage of the funds that are aligned with the taxonomy from a revenue and CapEx perspective. So that was the European approach. I know it's early days, Marina, but I was wondering if you could tell us, what is the expectations in Brazil, if you have had already, I know it's early days, discussions of making, mandatory to report against the taxonomy, or, more, the link directly with green bonds. Tell us about yours.
It is very much early days, and it's been said here before that the voluntary nature of these initiatives make them more palatable to participants, to the private sector, and for governments as well. And this is very important because we want sustainability to be a state goal, not a government goal. And for that, having criteria and a set of concepts that can or cannot be adopted pursuant to the market participants' desire really makes it easier to assimilate. At this point, we are very much focused on creating fluency on this new language. We are, of course, always open to stepping up the requirements, but for now, the idea is to educate and disseminate and create this a common ground that to be built around this newly created language that we're very proud of.
Which is already a lot. Nicole.
It's a lot, and it was done in record time.
Yes, absolutely. Nicole, what about Australia? What are the discussions in Australia?
Yeah, so I think we released our taxonomy in June, so not quite as infant as where you are, but not too far ahead of you. I think very similar to you, what we really see, and the drive, like we said, came from the private sector. They saw utility in the market, and what we want to do is create an optimal enabling environment to support the private sector to use the taxonomy. So ASFI, we sort of are custodian of the taxonomy at the moment. We are doing a quite detailed implementation pilot with financial market participants across representing almost our entire banking sector, as well as asset owners and other market participants, looking at a variety of different use cases, understanding where it has utility, where it helps with financial decision making, and where additional guidance is needed in the market. And so we have identified areas where additional guidance will be needed. I like to call it like the how-to guide, which is the instructions that come with IKEA furniture, if the furniture is the taxonomy. So it helps you to kind of use it in different ways. And we definitely see that as front-running any kind of regulation. But I think the Australian government is continuing to be very supportive, working very closely with us, and are giving very strong signals to the market of where it can be helpful. So climate-related disclosures in sort of which is mandatory in Australia. It's very helpful in that revenue and that capex to identify your climate-related opportunities, and we'll be providing guidance on how companies can start to use it in that way. Transition planning we see is absolutely critical, that link between your capital allocation plans and tracking your capex over time. And so these are the types of support that we'll be providing. The Australian government is putting out voluntary guidance for transition planning, and we'll be supporting them to give case studies of how the taxonomy can be integrated into that. And the government is also thinking about fund labelling and the role that taxonomies can play in supporting that. So at the moment it is voluntary, but we definitely are working hand in glove to demonstrate and support the market to use it for all of these uses so that we can start to see the benefit that you articulated, Helena.
Thank you, Nicole. I'm very pleased that you mentioned about the importance of the capex investments, because one of the big lessons in Europe is that actually it's been the guiding the taxonomy's role in guiding the capex of companies, where I would say the taxonomy has been most successful. In June, we were with only 2.5 years of application of the EU taxonomy. We had counted already 800 billion of investments in climate mitigation. And the most interesting part of that is that the capex investments, the alignment goes alongside with a description of their capex plans and how that relates to the transition plan. And what we discover is that investors really appreciate that, because thanks to that, not only they use the taxonomy to verify the credibility of the transition plans, but also, it gives them really sense of the direction of travel of the investments, of the commitments of the company. Very quickly, the last thing is that we have already now sell-side analyst studies that have found a positive correlation between taxonomy alignment and financial market performance. So this is the real trigger, and maybe that answers that while some companies complain about the reporting, and yes, in some aspects they were right, so we are simplifying the reporting for companies, all of them, they want to see their economic activities in the taxonomy. So, Dr. Ma, we were just talking, 2 hours ago about the learnings, and the different regions of the use of taxonomies. Tell us about what have been the learnings in China of, now quite a few years of using the taxonomy.
Now, maybe I'll go straight to the common ground taxonomy, which is because we only have 13 minutes, right? Would that be a topic?
But you can answer quickly the lessons and then we'll move.
Yeah.
Yes.
Now, if it's about domestic lessons in China, I think one thing is that we do feel the mandatory usage being very powerful in giving incentive to the good performers and driving resource allocation. Now, initially, if you ask the market players, the banks and so on, do you want to do mandatory reporting? Everybody will say no. Yeah, just like you ask the students, do you want to take exam? Say no. Yeah, and but a school with no exam is no good, right? You all know that. Of course, initially it could be a phase of transition, making awareness and demonstrating the future benefit and so on. But eventually, I think moving to some sort of a mandatory usage is very important. But also, it's critical that you, on the one hand, require mandatory usage, which is a cost to the users like bank. On the other hand, you have to give them incentive. If only cost, no incentive, that's no good. What incentive? If you do well, I will encourage you. I'll give you either a good ranking, good reputation, or give you money, monetary incentive. That's how this sort of a resistance can be offset in terms of mandatory adoption. Now, maybe I'll move straight to the common ground taxonomy, which is really, I think, plays a big role in enhancing interoperability now, at least among a few economies. Yeah. So that was about 6 years ago when Europe was thinking about launching the International Platform for Sustainable Finance, and they asked the PBOC, whether China should join and do something. And my colleague asked me, and I said, let's do two things. Number one, we should join. China, Europe, being the two largest green finance economy, we have to collaborate. And secondly, let's do a concrete thing rather than just going to meetings and blah, blah. And that concrete thing is to develop a common language that can be recognized both by Europe and China, which later was called Common Ground Taxonomy. And I told the first meeting of that discussion, if Europe has a taxonomy like that with a few hundred items, China has a taxonomy, a few hundred items, let's put them together. The common overlapping portion is a common ground taxonomy. So the concept is as simple as that, but it took us 2 years to develop the first version of the CGT. But immediately after CGT was developed, that was in the middle of 2022, to my surprise, the market began to use it because they found beneficial. For example, the China Construction Bank issued the first international green bond using the CGT as a label. Of course, it's labeled against the CGT because it's consistent with CGT in terms of use of proceeds. At the same time, it's using the ICMA green bond principle, on other criteria. And after that, many other Chinese issuers. In fact, all Chinese major financial issuers issued green bonds internationally using CGT as label. They found a couple of benefits. One is they can avoid the duplication of verification, right? Because if I need to issue in multiple markets, I only need to do one verification against one taxonomy. Secondly, enhance the recognition, because globally a lot of investors, they know CGT, and they know CGT labeled green bond is a high quality bond. That's why I want to buy. So subscription ratio goes up. And the third benefit which it brings is a lower funding cost. And after that, many Chinese issuers issuing green bonds in China began to use CGT as label. And they found that that benefit is bringing down funding costs by 10 basis points, compared with situation of without using CGT as label. And now we have green bond funds being labeled as CGT aligned, the green deposits from Australia being labeled as a CGT aligned. And the last year, Singapore joined the CGT, and we made it the multi-jurisdiction common ground taxonomy, 3 parties, done by Europe, China, and Singapore. And going forward, my hope is that let's expand the MCGT in terms of country participation, in terms of activity coverage. And I'm now hosting a small group discussion involving Europe, China, Singapore, Australia, and Hong Kong. We are planning a roadmap towards MCG 2.0, hopefully to be launched next year, if it's approved by IPSF, working group in December this year.
Thank you. Thank you, Dr. Ma. And maybe we can invite, one day we'll have Canada and the Common Ground Taxonomy in Latin America joining. So we're short of time, so I'm going to go straight to you, Maria Paz, that you can tell us a little bit more about really, what are your expectations in terms of the principles of taxonomy interoperability? How would they apply to the work you're doing in Latin America? And what are you expecting moving forward in terms of the capital flows that will, move in to Latin America?
Thank you. This week, in most of the events I've been participating, there's been lots of talking about how to de-risk investments and how the lack of blended finance is affecting the sustainable finance market. So I think developing taxonomies is an excellent way of de-risking these investments. So investing, for us as a development bank, investing in taxonomies and developing taxonomies is a way to help our shareholder countries to de-risk these investments and to attract new cash flows towards sustainable development. So as a development bank, we also feel like we need to lead by example. This year, CAF published its new framework, which is our own kind of taxonomy, including all of the best practices in the market. And we also signal our own commitment of 20% of the issuances of each year going towards sustainable labeled bonds. So this year we've issued almost 2 billion in sustainable bonds, our first blue bond in a very innovative partnership with UNDP. And also the framework is committing to align in a best effort basis with the EU taxonomy. So again, going to the common principles. And also, as an example of our commitment with these taxonomies and how to align and get closer our region towards best international practices, CAF was elected this year to the executive committee of the ICMA principles. So for the first time, our region has representation in this committee. I think we already made our first progress. This week, ICMA published the transition bond guidelines, and we made sure that emerging markets and Latin American standards and local realities were reflected there. Because we also think these taxonomies need to be conscious of the different realities. Sometimes we would want to report as per the EU taxonomy, but unfortunately our realities and our country realities not always permit this. So I think that's also the benefit and what we're looking with the common framework for the Latin American and the Caribbean taxonomies is to align with international practices, but not to forget our realities and not to make these taxonomies impossible to implement. Because something is theoretical when you're writing the taxonomies, but also I work in the bond issuances. So actually when you're going to implement these taxonomies is when some of the technical challenges arise. So I think it's very important not to forget the local context and the local jurisdictions for each of our region.
Thank you so much, Maria Paz. Unfortunately, we are really running out of time, so we have only time for maybe a couple of questions. But before I go into the public, so please start thinking your questions, I want to bring Barbara's son into our conversation, because Barbara has been one of the leaders of the Canadian taxonomy, and we just heard that there are some really good news, coming from Canada to the taxonomy world. Barbara.
Yes, thank you, Elena, and it's nice to see Canada in orange on your map still. So my name is Barbara Svan. I'm the CEO of a university pension plan in Ontario. It's one of the larger provinces in Canada. I'm involved in all this work because I was involved in the Government of Canada's expert panel on sustainable finance, where we recommended a taxonomy in a follow-on effort called the Sustainable Finance Action Council, which brought together 25 of the largest financial institutions in Canada that probably represent about 90% of the capital markets. And our reason was for helping Canada transition its natural resource-based economy. So we focused on green and transition. You might know our new Prime Minister, Mark Carney. This was a big week because he issued his first budget, and in the budget, it knows that the government reconfirms their support for the development of a Made in Canada taxonomy by the end of 2026. And these will be important voluntary tools for investors, lenders, and other stakeholders to the race to net zero by credibly identifying green and transition investments. And it will announce the Secretariat by the end of the year. This will enable the government to meet its pre-election commitment of being able to issue transition bonds in 2027. You'll note that that timeline is quite tight. So we'll be leveraging all your work. So thank you for your leadership as well as the principals.
Thank you so much, Barbara. And now, very quickly, let's see if we have any questions from the audience. No. Yes, there's one question over here. Marguerite. Yes, thank you. Thank you. And please say your name and your organization.
Hi, I'm Vish from Ambire Global, been involved in a lot of taxonomies. Just a question mainly for EU or China. We always talk about how the flow of preferential capital increases after having taxonomies. I know we have a lot of case studies, but do you have a country level assessment or a regional assessment on how much have the capital flows actually increased towards sustainable investments after the taxonomy?
Do you want to answer? And then I can start. So very interesting because I don't know how familiar you are, but in Europe how it works is that there is the platform on sustainable finance. So we have the international platform on sustainable finance and the EU platform on sustainable finance. And during our last mandate, one of the tasks that we were given by the European Commission was precisely to develop a methodology to start monitoring capital flows towards sustainable investments, and then to do the first sort of pilot project. So the 800 billion that I was mentioning before comes from that pilot project, but it was probably the most fascinating thing for me, you know, maybe coming from the regulatory perspective or world, was that what we knew then we looked at only 1 year, 2023, and what we could know then is how much exactly investment had been done, you know, by companies in every single economic activity at the level of detail of the taxonomy, which is not, you know, power generation, is power generation on, you know, by this energy. It is about distribution, it's about transmission, you know, like very specific. And you could then start seeing, you know, which economic activities and technologies are being underinvested versus those who are being invested. And in a world that, and in a context that we are today, where public funding, you know, is so under pressure, you know, to know exactly which economic activities and technologies and type of research is being underinvested, you know, the private sector is not going into it, is an incredible policy tool. And I think for me, that was the biggest lesson that we learned. Dr. Matt, would you like to?
Yeah. This is a very complex question of, you know, how much taxonomy has helped mobilize green financing, right? Internationally, I don't think there's enough data to show, but domestically, I can give you a couple of numbers. I wouldn't say this is entirely due to a taxonomy, but taxonomy, it plays a big role in this what I call green financial system, which is based on taxonomy. Then we got disclosure, then we got the financial products labeled against taxonomy, and we have some incentive to allocate incentive to the green labeled based on taxonomy products. As a result, China now has a green lending market of 43 trillion RMB. It was up like 10 times within 10 years, yeah? And that's equivalent to $6 trillion US. And that's just a mind-boggling number. The average green loan ratio in the banking system is 16%, meaning 16% outstanding loans in China as a percent of total loans is green. And now that's already bigger than most emerging markets. As I said, emerging markets average is 3 to 4%. In Huzhou City, which has a stronger incentive based on taxonomy, it has a 34% green loan ratio, compared with Chinese national 16% green loan ratio. I guess you can see something out of that, right?
Thank you so much. well, we're out of time. I just want to really say to all of you, not only thank you for being with us today, but congratulate you for the Australian, the Brazilian, the Canadian taxonomies, and all the efforts in Latin America for the common ground and for the multi-jurisdictional common ground taxonomy. I hope we can meet in a few years' time and start discussing numbers of, how much millions, trillions, have been mobilized thanks to the taxonomy. Thank you very much, everyone.
Thank you. We'll take a picture, please, of the panel. And we have two excellent panels coming up just after a short break that will take just behind the auditorium. Let's reconvene in 4:10, please. Thank you.
Okay, great. Okay, we're going to get started again. Wow, that was quite the session earlier. So it's really challenging now for the second panel. I think, in sports, maybe football, we talk about color commentary. How do we bring color to, a session that was so great, coming from the regulatory perspective? And I think as we saw in I think all of the examples, but certainly Australia, Barb talking about Canada, I think a big element of success has been governments working with the private sector. In some instances, the private sector leading and basically saying, we see value in essentially in many of the values the regulators speak about. Actually, the private sector shares that view. We're going to talk about use case of taxonomies. We heard a lot about sort of the governing or the bigger concepts of what they look like. So let's try to bring the color in terms of diving into the details, the uses, the challenges, and certainly and how they're being applied. I think everybody, at least in this room, I'm not sure about at the Australian barbecue family offering, but for here we can agree that taxonomies are really a central component of a sustainable finance architecture. You really can't have one credibly without actually agreeing what is sustainable, what is green. It enables financial, non-financial actors, as well as certain policymakers, regulators, to share a common understanding of what economic activities are contributing to global goals, such as the Paris Agreement. So it's defining the common protocol or the language. And in doing so, it acts as the building block for standardization, for disclosures, for the opportunities, and the range of, including as Dr. June talked about, the potential to have incentives. But it's incentives for what? It provides you the definition of how they can be used. So we see this process happening directly on the ground. UNEP-FI, we're very active in the space. We've been very, very proud to be supporting the Brazilian government in contributing to the development of the taxonomy here, including in the coming year in the piloting phase. We've also been working in the region in Chile and Costa Rica and Panama in the development of their national taxonomies, and certainly in the implementation of the taxonomies within the financial sectors across banking, insurance, and investment. However, of course, there are challenges ahead. One of them, as was referred, the proliferation of frameworks requires interoperability, which was already mentioned, and the usability and uptake, which in many contexts, taxonomies are voluntary, but they certainly require a strong value proposition to ensure ownership and take-up from the market. So my name is Eric Usher. I'm the head of UNEP-FI, and I'm really love to see many friends in the room and many of them, the brains behind the taxonomies we see around the world. And I think Barb mentioned the progress this week in the Canadian budget. And I believe, once again, if the government is getting on board, but the energy of the private sector, people like Barb, who spent a lot of time on taxonomy development, she also has a day job, but a lot of time on driving it, and with others across the industry, I think it's a critical element of what's needed to bring it together. And so let's start to talk about in more detail the use cases. And with that, I'd like to introduce the panel. We have Amruta Kelkar, who is Partner of Sustainability and Climate Financial Services at Oliver Wyman. Amruta, please. We have Frederick Demaritz, Head of Sustainable Finance for UBS Latin America. We have Sean Kidney, CEO for the Climate Bonds Initiative, and Gwen Yu, Head of Emerging Sustainability Issues for JP Morgan Chase. So, Gwen, there you are. Great. Okay, Gwen, I'd like to start with you. Could you set the scene for us in terms of JP Morgan's perspective? Give us a sense of the relevance and importance of taxonomies, particularly for the asset managers and owners.
Yes? Okay. It was quite technical, the last panel, so I'm going to bring it back down to what we're seeing in the markets today and what uptake we're seeing, because probably that's going to be most useful. So concretely, We've done a 500 million green bond issuance where 50 million of it was a use of proceeds that went into biodiversity. And this particular green bond was Verbund. It's an Austrian utility company. And they were able to align most of their things to the EU taxonomy. However, it is not an EU green bond standard bond because that was not ready yet when the bond was issued, which I think highlights the fact that a lot of the uncertainties that we see in the changing regulations really plays into the role of whether or not capital is getting crowded in to green taxonomies. Now, if you look at performance, because that's what's going to drive scale, then we are not seeing new investors coming into the market because it's an EU GBS bond. That's probably because it's still nascent. So there's only been about 20 plus or so that's been issued in the last however long, probably within the last year. Most of those are going to be utility companies. And that's because that's what, if you look at the monitoring of capital flows that the Platform on Sustainable Finance did, that's the bulk of where the EU taxonomy ratios are coming from. So the uptake is there, but we're not seeing new investors coming in. The appetite is there. I talked to a few asset managers yesterday, and I asked them for their fixed income portfolio if they're seeing a difference in, or if they're asking for EU GBS versus just a traditional green bond. And the answer right now is no, because the supply is too small.
Okay, great. Thanks, Gwen. We're going to dig into that a little bit more. But first, Frederick, I'd like to come to you. Experience in the Brazilian context in using taxonomies. Obviously, it's very, very early stages. But you know, what do you expect in terms of how this is going to play out in the Brazilian landscape, in terms of what you're hearing in early days?
Thank you, and great to be here. Thank you, B3, for hosting this event. Complementary response to what Gwen mentioned from a Brazilian and emerging market standpoint. Obviously, we don't have a supply that is taxonomy aligned for Brazil. That would be a little bit too short. But I think what we're seeing in terms of you know, big trends over the past few years at UBS, we've done about 100 transactions that were labeled. We typically see that there is more demand than supply in that paper, and I think issuers typically use the taxonomies that are best accepted, European one, obviously, and they tweak it or they adjust it to see if what is in the prospectus, in the documentation, is aligned with that taxonomy. And I have to say, you know, the fact that you have several taxonomies, investors who have been looking at label bonds from Brazil are used to that. So we'll now have the own, you know, the Brazilian one. Issuers will have to adjust. We're talking about a 2-year implementation or adjustment phase. I believe it's going to be much faster than this, to be honest, because for one simple reason, if you're an issuer and trying to tap the market, you'd rather have a bond or a paper that's aligned with what the taxonomy is saying, as opposed to trying to explain why you're not taxonomy aligned, provided taxonomy, you know, incorporates your sector, which is a big, obviously, limitation. But so key message here is, you know, over the past few years, we've seen investors grappling but living very well with the idea that you have several taxonomies. And most large asset managers that we talk to, they have their own methodologies as well. So the fact that we tell them this is a green bond is very often not enough. They do their homework, they have teams that analyze, you know, the eligible projects. So I think we look at this in Brazil right now with a very positive angle. It's been said in the previous panel and during the whole week, very important to have a taxonomy. You need to have clear rules for everyone, for issuers and buyers. And the idea that you have a taxonomy is to attract more funding. We're not doing this just to add extra costs for issuers, because in the first moment, this is what it is. But we're doing this because by clarifying the rules, you can attract more funding, and hopefully you can give them financial incentives as well, you know, to go in the game, accelerate the transition, and so on. So overall, optimistic message.
What, following on from that, how could you gauge the mood today in the Brazilian market in terms of excitement maybe versus fear?
Implementation of a taxonomy. I think a lot of question marks, to be honest, and a lot of doubts about the technical criteria, and I think that's totally understandable. We've seen this in, you know, more than 40 jurisdictions, so it's going to be one other example. My fear or my concern at the bank level and at the personal level is that maybe some issuers might say, well, why don't we delay our next label issuance just because it's too difficult? I want to get the cash on my accounts, and then we'll talk about the label, if that's okay. So I want to make sure we don't get to that conversation, so we're trying to anticipate those discussions with issuers so that it's not a huge burden for them, but it's something that paves the way for a good discussion with investors.
Great. Okay. Thank you very much, Frederick. Amrita, Oliver Weinman has been contributing with many aspects of this sustainable finance and financial architecture development overall. Can you tell us a little bit about your overview of the regulatory market-related engagements in this area?
Yeah, of course. So there's a couple of things that we've been involved in over the past, say, 4 or 5 years. One is helping financial institutions set up their internal taxonomies for the first time. This is typically kind of a very, very detailed piece of work where we take sort of the public guidance and we make it very real for the institution. So it starts with, what are the themes that are fit for purpose for you as a bank or an investor? It starts with always the North Star of we're trying to incentivize as much capital into environmental or social themes. So that means including being quite expansive in terms of the products that you include in your taxonomy. And so sort of we go through that exercise, and of course always referring to external benchmarks and taxonomies to make sure that you're not greenwashing and that you have sort of you have an anchor to something which is public and reputable. And then we go through sort of a number of design decisions around how you build that taxonomy and make it very real, often for your internal finance teams to tag and track and make sure that this is something that you can go out to the market with, because often, in fact, always, it's underpinning a large commitment that every financial institution has made. So I think we've calculated something like 11 trillion globally that has been made, a commitment by 2030 across financial institutions. I'm sure the number is greater than that. That's just the public commitments that we were able to add up. And so it's very important that they are able to track it and they're able to sort of prove that this money is coming to fruition. So what do we do? I think the easiest of the design decisions, not easy, but it's just what themes do you want to choose for yourself? Where do you want to go? How do you kind of double click on those themes if it's sort of power generation? What are the various technologies that you can include? I think then the sort of technical aspect of it is how do you account for things which are not mainstream products? So maybe a bond or a loan, perhaps that's mainstream. But if it's something like a sub-finance line, something slightly esoteric, but you want to include it because it is incentivizing capital into sustainable themes, then you have to sort of work through, okay, how do we do this? This is not really something that any other institution has published, so how do we justify it? How do we kind of account for it? And then I think probably the toughest decisions are around how do you account for things like general financing versus use of proceeds? I think the panel's talked a lot about use of proceeds, and I think it's not easy, but in some ways it's clearer. With general financing, which is where most of the capital is coming from, you could argue to drive the transition, you do need to come up with rules and make sure that they're aligned to public guidance. And then the other one that is always discussed is how do you account for both green but also transition finance? Because I think the whole world recognizes that actually probably the burning platform here is, no pun intended, the burning platform here is to get capital to companies to transition to a greener state. And so how do you account for that? And so that's one book of work. And then on the public side of things, very relevant to, I think, where we are today in Brazil, my colleagues have been working on 2 initiatives recently. One is with Febraban, who I think is in the room somewhere, on the public consultation that the Ministry of Finance ran for the most recent sustainable finance framework that Brazil came out with. And so we were responsible for collecting the opinions of the financial institutions, industry, and sort of providing a cohesive voice in terms of feedback. And then the other is an initiative called Eco-Invest, which is with the Inter-American Development Bank and the Treasury, which is trying to incentivize foreign capital into Brazil into sustainable projects. It's addressing a number of, I think, structural impediments that foreign investors face when they invest in Brazil, such as currency fluctuations, such as the higher cost of capital. And so there's a couple of structural or structured products that help you to circumvent that, or at least address those things. And I think to date, my colleague was telling me about $70 billion of Brazilian real has been mobilized towards some of those projects. So just to give you kind of a spectrum of the sorts of things that we dabble in.
Okay, great. Thank you very much, Amrita. Sean, I'm going to come to you. You're the father, the godfather, the dean of the development of the green bonds, climate bonds market. What do you say when issuers say, use of proceeds? Do I really need to do all the work? How do you describe the opportunity?
No, you don't. You can do what you like. But I can tell you that investors really like it. Because most investors, and it's asset owners and fund managers who do the work for them, that are driving this. Governments have not driven this, except maybe in China. I'll come to that in a minute. It's asset owners who have concern about long-term risk in their portfolios and have frankly had a real lot of problems figuring out what the hell to do with it. To take the reinsurance companies, who in 1996 were absolutely addressing, on the liability side, the need to, let's say, withdraw from reinsuring Mar-a-Lago, as they have, for example. That's reinsured by the state of Florida, by the way, so it's a government risk for the presidential compound there. So they managed to make the liability side work, but on the asset management side, they use modern portfolio management theory, 5-year horizons. How do I deal with long-term risk? It wasn't until we started giving them an instrument which can meet the short-term risk yield requirements and also, in theory, address a long-term risk that we started getting traction. And that meant, we're talking about 15 years ago. I remember that 15 years ago, there were $2 billion outstanding of green bonds. And now there is, in the green and sustainable market, there are 6 trillion. Because it works for portfolio managers. And so if you're someone who could issue a bond or do some debt, and this applies to equity too, by the way, the National Stock Exchange of India, where I'm helping them do green equity principles, tells me that 22% of all listings this year were green equity, labelled as green equity, promoted as green equity, and that's coming through too. If you want to get attention, this is a way of getting attention. So what we've seen from 2 billion to 6 trillion is constant oversubscription. We're still seeing constant oversubscription. When Tokyo Metropolitan Government came out last week with its first ever certified resilience bond, a green bond for resilience, 7 times oversubscribed in the London market. They're blown away. When the Chinese government did their first ever green bond in the London markets at the beginning of the year, I think they're 8 times oversubscribed. The French government, with their bond at the beginning of the year, were 18 times oversubscribed. This started happening when we were 50 billion and is still going through. So look, all I'm going to say is you don't need to do anything. Feel free to do what you're doing now. That's perfectly fine. But look, if you want to get the attention of investors, you're kind of missing a trick if you don't have a look at this. And by the way, that involves setting up some internal pressures. I still remember sitting next to the Middle Eastern head of Engie, like Gwen next to me, and he said to me, he let in, but someone else was speaking. He said, this green bond stuff is giving me a real headache. Huh? Well, why is that? Well, because headquarters in Paris issued a whole lot of green bonds and they got such a good return, they're putting pressure. He sent a memo, I've got to fund green stuff in Dubai. Yes, I said, that's exactly what we're trying to do. And that happens at a government level and so on too. So, like I said, you don't need to do anything, but there are advantages.
So let's go to the next step. Dr. Mao was talking about, this market development predates taxonomies. So what happened when the taxonomy came in? How did that affect the market? You can refer to the Europeans or other markets. How do you see the value or what does it do to the market?
From the very early days of this market, the idea of credibility was incredibly important. Now, my World Bank colleagues may dispute this, but the very first World Bank bond, when it was issued in 2008, was when they were doing the roadshow, investors were sceptical. Swedish investors specifically. You'll appreciate this, Eric. He has a Swedish family. They said, but your CEO is Robert Zoellick. You may remember, Robert Zoellick was not famous for being good on green. And they said, can we really trust you? So they decided to shore up the credibility. Christopher Flensborg at SEB thought about this idea. Let's get Cicero from the University of Oslo to kick the tires and do a report and say it's correct. Well, the World Bank did actually have to take some things out of their portfolio. Greening coal-fired power stations, for example. And then they had and this established this idea of getting the independent review for credibility, which has now dominated the market, as you heard earlier. we started critiquing the market. There were a few crappy bonds in the early days, and we put out a taxonomy in 2012, which got adopted by all sorts of people, including the investor associations of climate change. Nathan Fabian, who was here earlier, adopted it in Australia when he was at the investor group in climate change. And then I did a presentation to the People's Bank of China in 2014, and they said, oh, green bonds could be really good for us. I won't bother going into the arguments, but let's say that's what we got to. And if we're going to do it, we can't trust the provinces because they will scam. We've got to have tight rules. They put out a rule. No one is allowed to issue a green bond. Really annoyed a couple of banks until we get the rules. On the 1st of January 2015, the rules came in, including a taxonomy. Whoosh! The Chinese green market went crazy. 2 years later, we were making a recommendation on the high-level expert group of sustainable finance that I was on with a few friends like Nathan Fabian to the Commission, and and DG FISMA said, yes. Whoa! Who knew that? And here we are. It worked, and at the back of that, we've provided a way of getting some trust and confidence for really difficult issues about what's involved. And that's really what it's about. I want to say a hell of a lot of people do not try and be compatible with the detail of the EU taxonomy or the CBI taxonomy or the Australian taxonomy. But you know what? They use it as a base because it sorts out problems. What the hell is sustainable agriculture? I mean, I don't know. I still have a problem with it. Do hybrid cars count, Gwen? Do you remember? Etc., etc., etc. They use the taxonomy to sort that out. They elaborate a bit more. So I can give you about 4 or 5 global banks that I know personally who've been using our taxonomy and a bit of the European taxonomy, and now they're looking for the interoperability version of taxonomies as their internal lending practice guide. And then investors use it too. And then when HSBC turns in for a new bond based on their internal taxonomy, and then JP Morgan Asset Management says, hang on, that's not quite in line, you get an argument about taxonomy, and who wins? Of course, it's the asset owner. And that's, going back to my original point, they're driving the market. They are looking for guidance. They need help with the due diligence capacity. Taxonomy fundamentally is a trusted, if we do it right, process to bring together due diligence and understanding for what is at the end, by the time we're finished, simply a shopping list for the future. But as you know, it takes a bit of work to get there.
Excellent, excellent, Sean. We're getting to Australian barbecue grade discussion. Great. I'm going to come back to you on the plethora of taxonomies and as we start to deal with that. But first, Frederick, UBS globally has been lead coordinator on a lot of sustainable issuance in Brazil, but also around the world. What do you see in terms of ESG related criteria? Which ones tend to attract and which ones deter investors?
I'll just use as a segue the comment from Sean saying that we're all trying to cut the cost of compliance. And of course, at first, when you do implement a taxonomy or any rule, you have to make adjustments. It's difficult for the loan book or for the teams on the capital market side. But hopefully, once you have that shopping list, it's easier for everyone. So I love that concept because, again, we're trying not to impose undue burden on corporates. I'm not even talking about the financial intermediaries, but they are the ones who need to find a benefit into all this. Getting to your question, there's several flavors or several criteria, obviously, that we have been following. Huge concern about greenwashing. A lot of people talk about greenwashing these days. But basically, when you simplify and clarify the rules, you hit those two risks, I think, for everyone in the market. Some flavor that's more in favor right now is obviously use of proceeds. I think SLBs were very popular over the past few years. They've lost a bit of shine maybe over the past couple of years. We do like them very much because they clearly link a KPI with a financial step up or step down, financial consequence, which I think is what we're all trying to get at. So I like the concept, but we need to make it better, improve it over the next few years. And when you think of use of proceeds, a couple of flavors that I would share, I would be remiss not to mention nature. We just had the guidelines from ICMA. COP is starting, and it's a huge challenge for companies and banks to identify and report on nature dependencies. That's going to be fascinating to watch over the next couple of years and think of metrics. In Brazil, blue has been extremely important. You might know, for the Brazilian audience, half of the population doesn't have sewage treatment, so that's 100 million people in the country. It's a theme that goes across emerging markets. So blue, it's not just a fancy label. It does represent something very meaningful on the environmental, but also on the social side. We're talking about just transitions many times over the week. And I'll just finish with one, which is probably a bit less positive, Eric, to be honest. We did a survey of all the issuances in Brazil from inception, and we found that only 16% of frameworks or documentations mention climate adaptation for Brazilian issuers. Needless to say, that's a fabulous avenue of growth, and all companies will have to focus. We're talking about physical risk and all types of risks.
Great, thank you, Frederick. And Gwen, I'm going to want to come to you shortly on the nature issue as well. But actually, let me go to Amruta first. I think on nature, many people know, a very important development this week. Didn't actually happen here, but with regard to the ISSB and their decisions in terms of moving forward on nature, and what we would hope to see over time is probably the adoption one way or another of the work of the TNFD, and so moving up that topic on the agenda there, which will be very important. Amruta, if I could come back to you, and once again, Oliver Wyman, you're working globally. How well are you seeing national taxonomies and sustainable finance frameworks reflecting the local transition pathways? How do we something global, interoperable, all of that, but the reality is local in terms of context. So what's the experience?
Yeah, it's tricky. I think the most prevalent examples of, from my perspective, of local taxonomies being embedded in the actual way in which you account for sustainable finance has probably been in Asia, from our experience. There are a number of taxonomies now public that are country specific. And we've worked with a couple of banks, and some examples of where, for example, if you're a bank in Thailand and you have a Thai company that you are trying to assess whether or not that financing is sustainable, you may refer to multiple taxonomies to make that decision, because you have the EU taxonomy, which gives you sort of the fundamental, it's been around for a while, right? And everyone sort of refers to it. And then you also have the Thailand taxonomy that you look to as well. So there seems to be kind of maybe that speaks to the interoperability a little bit, but that's how it's being implemented in some ways. I think in the sort of market that I primarily work in, which is North America, obviously the taxonomies are still under development, so I think we'll sort of wait to see. And then, of course, very encouraging, obviously, to see the Brazilian taxonomy being published, or at least the version 1 of that. From my perspective, just a kind of a footnote, perhaps, is that I think the regional taxonomies are the most critical when it comes to transition finance, because that's really where you are assessing whether or not a company is moving in line with what is appropriate for that region. And so, rather than sort of heading towards the goal of green, it doesn't perhaps make sense for a Canadian energy company to be moving at quite the same pace as a Brazilian energy company. And therefore, if you're trying to assess a company and include them within your taxonomy, it probably doesn't make sense to refer to a global benchmark. And I think that's probably where I see the most value from my perspective. Not there yet, but that is the gold standard, I think, eventually.
Okay, thank you. And obviously, if we think of local context, here in Brazil, nature is key. So, Gwen, could you talk about your experience, particularly in the Latin American context, around how nature is moving in terms of the global agenda, including related to these topics?
Sure. I want to touch upon what you talked about for adaptation and resilience. I think what we're seeing is there is green spend going in, but it's just not labeled that way. So if you look at a lot of the green frameworks, it's kind of embedded already within, or it's part of the company's BAU because they've had a shock, like their factories flooded or there was a wildfire, so they had to put the CapEx in anyway. On the nature part, I'm going to go more global than Latin America because I think it's going to be comparable. And what's important, I mean, we are a financial institution, what's important and what kind of Sean highlighted was, where's the performance, where's the money? And if I wanted to get money into nature, one of the main challenges that people will always tell you is that nature is not fungible, we don't know what the metrics are, we don't know what the KPIs are. We looked at this from a listed equity perspective to see what kind of frameworks would be available, and we scanned the different products that are out there that are investable and to see what they're using. And they're pretty much all over the place. There's some frameworks that are pretty good. Some of them will be very thematic, like land, water, etc. So we said, okay, so what is the quickest way to scale this? Then we looked at voluntary carbon credits, because within voluntary carbon credits that are nature-based, that is the bulk of what's being sold today. There were two issues, so there were two problem statements there. One was, if we were buying our own voluntary carbon credits for our own operational purposes, and we wanted to prioritize nature and carbon at the same time, how do we start looking at that? What are the principles? And then second is, if we're going to be structuring these into products and trying to help some of the project developers out there finance those projects, then we also need overarching principles. So we recently published a paper on dual outcomes for nature-based removal credits, and how do we optimize for both carbon and nature, knowing that those credits were not designed for optimizing biodiversity to begin with. So the 6 principles are out there. You can Google it. It's like, it's public. It's on the JP Morgan website. I'm not going to bore you with it. But the point there is a way to do it. The project developers don't necessarily want to give up equity because that's too expensive for them. So they're looking for a debt facility that will be able to finance it. And there are a couple of structures out there like outcome bonds, they're debt facilities that have been out. So for me right now where we're at, it's kind of like in Field of Dreams, if any of you guys have seen the movie, or I'm dating myself because I'm old now. But you build the field. So we built the field, now we're trying to see if they come or not.
Great, thank you. Nice picture, Gwyn. If anyone can build the field, he's sitting right next to me. Sean, the elephant in the room, as was raised earlier, we're starting to hear some of the sort of the use cases and the usability type issues, and you've made the general value offering pitch for why green bonds or green instruments. As was mentioned earlier, we have 50 plus taxonomies being developed around the world. So the elephant in the room obviously is this too many, and how do we bring them together? And Nathan introduced the principles for taxonomy interoperability. Can you talk a little bit, because CBI is very involved and we're very pleased to be working with you and with PRI on this issue. How do you see interoperability coming together? And tell us a little bit more about the Sustainable Finance Taxonomy Mapper.
You know, Eric, that's quite a big question about how we run the planet. Because
it's barbecue talk.
Because clearly the science is global science. What is relevant to emissions reduction in Japan is relevant to emissions reduction in Chile. Because it's one atmosphere, it's one world. We have to end up having a common understanding of what we do globally. Otherwise, we are doing what we've been doing in the UNFCCC conversations the last 30 years and saying, well, I can emit because you haven't started and all that sort of stuff. So that's the background. The second background is the way we get commonality of rules on the planet is challenging. Every so often I wish we had a global president, and then I think of Trump, and then I think, okay, maybe not. How we organise governance on the planet is the issue of our lives. It needs to be the issue of our lives. Climate change is forcing us as the human species to start working properly globally, collaboratively globally, in a way that we have not really done properly over the last 50 years. We've blown it in a time of relative peace and relative safe climate. And this is just one of those issues. Of course, the other side is the way we will go through this is active, collaborative work with lots of bilaterals and so on, a bit like how the Article 6 negotiations are going. You have a framework, and then you have a lot of countries starting to work things out, and that's what we have to do with taxonomies. We're not going to have a president. We are not going to have a global government with a global police force. And frankly, I'm really pleased about that. But we are going to have commonality approaches around the world, including the idea of tailoring how the police force works in Brazil in a different way to the way it works in Japan because of the local social context and so on. Taxonomies are no different in that context. Taxonomies also, by the way, are a kind of test case for how we tackle some of these other things too, as is the network we're bringing in the financial system, a test case for how we collaborate globally on really critical issues. It's another exemplar case. In this case, we've simply got a whole lot of people doing stuff locally linked to global science. That's why the term science-based is appearing in every single taxonomy term around the world. Critically important. Do not imagine that's a minor term. That is a critical departure from everything we've been doing at a national level on climate for the last 30 years in most countries, which has been, we'll start with the science and then we'll say, oh, Gwen, this is really hard, isn't it? What about we just do a bit of this? Will that work? And then you have an NDC of the last few years, etc. So that's the first thing. Within that framework of collaboration, cooperation, common principles, look at the G20 principles for taxonomy and you will see what I mean. You have a lot of commonality, but you have got a lot of localization, and you have some people way ahead of the others. Europe totally fudged the issue on agriculture. Member states couldn't agree. There's no agricultural criteria in the European taxonomy. But in Colombia, it's rich and fantastic. In Brazil, it's really good, as it should be. And hopefully, Europe will then just commonly adopt and so on. There are advances everywhere. Hong Kong has got resilience in its taxonomy, as is Rwanda, as is Brazil now. Other countries haven't. So we're going to get this kind of process of different economies focusing on things that are relevant or being courageous, unlike the Europeans in agriculture, on moving forward in some of these other areas. And then others will slowly catch up in a collaborative manner, as long as we establish principles of interoperability. And by the way, that's what we just launched, the principles of interoperability, to influence this conversation globally. And there are tools we have to bring in. We have to have AI-based mappers to allow people to navigate. I want HSBC to be able to do a world's best taxonomy using an online AI tool that references the Canadian taxonomy, soon to come, Barbara, soon to come, the EU taxonomy, the Australian taxonomy as well, because they're a global bank. They need to be able to work on something that works across the world, etc. There's tools we can have, and this is a clue for global governance too, of course, all the other arenas that you and I might talk about on another day. So that's what's actually happening. Today, we've launched the interoperability principles. Hallelujah. Tell you what, it's a bit long-winded. It's a little bit hard to read. We haven't done that well on the making it easy. Sorry, we were mea culpa. But they're there, and they do establish some technical approach to how to do it. There will be tools coming through. They are largely consistent. If you take Helena's view about the three big areas that we have to tackle, property, energy, and transport, which is about 3/4 of the green finance, well, actually, we're incredibly well aligned across the whole planet. We just have to make it really obvious going forward. So let's move on to the next topic, compliance issues. Well, actually, promotion issues. Because the taxonomy is a really, really cool tool to do something which is otherwise hard to do. And I think Christine Lagarde said this at the ECB when she first said years ago, and I'm looking over at Irene because, let's face it, if the central bank says something, everyone quakes in their boots and wants to do it. So Christine said that she was waiting for the European taxonomy to then look at how to support sustainable finance in ECB policy, essentially. Words to that effect, Irene can figure it out, tell us later. That's exactly right. The taxonomy becomes a tool to be able to crystallize and bring together incentives. The People's Bank of China has got cheaper lending to banks, the liquidity lending window of the central bank, if they post green bonds as collateral. Whoosh, the market went off crazily. Various other central banks, like the BCB here, has been fantastic in driving sustainable finance and supporting it, knowing it is essential to the financial stability of the Brazilian economy. They understood early. Some other banks took a lot longer to get there. They understood early. These are the things that we need to start doing. Singapore, when they put out their taxonomy, quietly said to all the ministries, you know what, we'd really like your capital investment plans to be in line with the taxonomy. The Ministry of Energy went ballistic. Are you kidding me? I can't do that. That's exactly what we want, right? We want that proper argument between science and what you can do. We came up with a solution. It took 6 months of negotiation and sorting it out, but it worked and it's still science-based. These are the arguments that we have not been having because we are travelling ahead, moving ahead, doing stuff the normal way without reference to the one thing that has created our modern civilization, helped us get to where we are, and we're now not listening, haven't been listening to science and evidence-based. The taxonomy is a channel for science.
Great. Okay. I'm going to test the mapper right now because I know the mapper is in your head. And obviously, one of the benefits of the mapper is everybody now has access to it. But something that I think I think you made reference to, but of course, across the finance industry, the notion of transition finance is a challenging one. Sean, would you be aware, or anyone else on the panel, where do you see best practice in terms of taxonomies for helping to deal with that issue?
Sorry, helping to deal with?
How definitions of transition finance or clarity on what is transition finance?
You know, there's a huge amount of work. I mean, first in the European taxonomy, we get this common conversation in Asia. Well, Europe hasn't tackled transition. We're going to travel transition. And by the way, Asia is doing a fantastic job of tackling transition. And we now have a transition taxonomy in China. We have a de facto one in Japan and so on. But the idea in terms of regulatory taxonomies was originally expounded in the European taxonomy, along with enabling and resilience measures, etc. But transition is hard. Transition at the end of the day, which is start off a hard-to-abate sectors, how do you take steel and move it fast enough to deal with our climate goals, is a necessary compromise between what we should be doing and what we can do. And that is hard. Because what we should be doing is stopping all emissions tomorrow morning at 9 o'clock. Let's be in no debate about that. That's what the scientists say. We're 30 years late to do that. So how do we shift things quickly? When we started publishing transition guidance for steel, for chemicals, for shipping and so on, pretty well all the industry said, we can't do that. Impossible. Now they're saying, and I particularly value my conversations in Japanese steel companies, is they're saying, yeah, we can do that. We can sort of see how we can do that. Even JSW in India now has started embracing the guy. We've had to socialise, we've had to educate, we've had to bring in incentives, talk to governments about tax credits and so on. We've had to help businesses see a path where they could achieve those science-based goals. But whatever, we have to start and keep going as ambitious as we can. That's the general rule. And then when it comes down to specific taxonomies, well, there's different sorts of transitions in taxonomies all around the world. There are specific guidance to the European taxonomy in industry. I'd actually like the European one to be tougher, but hey, it's pretty good. The Singapore taxonomy is great on this topic. So then I'm getting into the detail. I don't want to compare taxonomies too much beyond that.
Okay, great. Thank you. But it shows that the mapper works. Anyone else have comments? Frederick, would you like to come to this issue? And I'm going to open up to the floor if people have any questions after that. So please.
On that specific topic, definitely, we're talking about a taxonomy, and there are many use cases for it. We've talked a lot about bonds, label bonds, but you can think of other aspects or use cases. And one of them was a really interesting financial innovation that came actually right from here, from B3 last year, when the exchange developed the certification of green equity based on the taxonomy as well. And so you stop looking at specific projects and understanding whether they are eligible or not, and you start looking at a company as a whole, line by line, revenue by revenue, capex by capex. And once you have this, the C-level, the executives are able to see how fast, how far they are from the goal, and you start thinking about transition. That's something we worked with them last year. We used, the S&P, Cicero, Shades of Green methodologies, which is exactly, giving you that compass to see, how much of your activity is classified as green, orange, or depending on fossil fuels. And the first company to get that certification was last year. First one outside of Europe, actually. And now you have a few exchanges globally using that methodology. But the point, so the first one was Sabes, the water company. The point here is that taxonomies have use cases that go well beyond label bonds. And once you classify, you're able to move faster in the transition. That's the goal, obviously.
Excellent. Amrita and then Gwen?
Sure. I would just add that I think my perspectives are predominantly from the financial industry, but I think there are a couple of things that you can anchor to. It's ideal to have a taxonomy for greenwashing purposes. So you can say, okay, these are the rules, we followed them, we're sort of bulletproof. But there are a couple of things the bank's already doing and investors are doing. One, many have net zero targets or decarbonization targets, if you like, which are specific to some of these hard to abate sectors. So if your companies are moving in line with that, then technically, it's a frame of reference. Many banks also have a client transition plan assessment framework. It's called different things in different banks, but it's a way of sort of assessing how well clients in a specific sector are moving towards transition. And again, referencing some of the sort of specific metrics like CapEx, how much of that is going towards decarbonization. So I think there are ways to calculate this, or at least account for it. But I do think at this stage, because of the greenwashing risk, it's still advisable to do it separate to your green sustainable finance metrics, just to sort of delineate those two things.
Okay, Gwen.
So there are sector transition pathways, as Sean and everybody here discuss, but just because the company has a transition plan doesn't mean that they're going to implement it. So at the end, you just have to follow through. And then even if you put your transition plan now, you have all these innovation, technological changes, political risks that come in that could throw your plans out the window. So you're going to need to adopt. So the transition plan is helpful, but I don't know from a long-term perspective, how often do you want to change or follow that through? If you look at it from a listed equity perspective, if I'm a portfolio manager and I have a pathway I have to follow, I'm doing it two ways, right? One is I'm exiting these things. It doesn't help the world transition. It doesn't help with the decarbonization strategy because I'm just exiting those companies. Or I'm having engagement conversations with these companies and hopefully they change. But again, you go back to being just that one little minutia. So transition plan, potentially good, but I wouldn't bet the farm on it.
On transition plans, we've got a collaboration now, which we'll be putting out an announcement soon, with Transition Pathways Initiative, Science-Based Targets Initiative, World Benchmarking Alliance, on collaborating on the transition guidance. At Climate Bonds, of our certification of transition plans, which we do now, we add in, you've got to have a CapEx plan and some other kind of tracking and so on. This is all coming together. This guidance is coming together. I'm also on the IEA's Net Finance Advisory Board. We use IEA guidance, like the IEA Steel guidance. The IEA Net Zero trajectory is the ultimate guidance now in the world for the energy system. We've got a lot of this around, actually. We just need to link it more directly to UBS's work and so on, which we're doing the press. You've been very good on this topic. And that's where national regulated taxonomies are so incredibly useful, because they can pick off all of these things. They can recycle this sort of stuff and make them local, which is what we're doing in the Australian taxonomy and various other taxonomies. The guidance is actually there. It just isn't incredibly visible. I appreciate that, because we've got to all sell it a bit harder now. But, if a company wants to look, it's there.
Yeah. Great. I should also call out the work of the Transition Plan Task Force. I think, as you say, it's focused on guidance and it's focused on learning, essentially. Okay, we do have a few minutes for a couple questions. Anyone want to challenge the mapper? Nick?
Thank you very much. Nick Robbins from the World Resources Institute. I'd just like more on the panel, I think, about how to accelerate convergence around taxonomies on resilience. It's coming up very fast. I think we do have a number of foundation stones, CBI and others, but how internationally could we do that? Because this is an urgent area where we're underinvesting quite substantially.
Okay, thanks, Nick. I'm going to just take one more. Anyone else? Resilience, down here in front.
Yes, thank you. I wanted to hear your thoughts on the second phase of most sustainable finance taxonomies, which are integrating biodiversity, technical criteria. Thank you.
Okay, so let's try to chew on that. Resilience, biodiversity, obviously linked as well. Who can speak to that?
Well, let me start off, because then I can say, then Gwen can pick up the topic. Resilience is absolutely the new frontier, but understand that resilience is not physical resilience. That's just the first stage of it. Hardening of infrastructure, for example, critical as it is. It's also social resilience. The Brazilian taxonomy is really important for that because it started to work in that area. In other words, in a world of constant climate crises, if our societies are not stronger, they will collapse. If they are stronger and more resilient, they've got more chances of bouncing back. There are a bunch of issues under that social issue. Gender, for example, is really critical. One of the key predeterminants of the strength of a community is gender equality. The less there is a gender equality, the more fragile the community is, etc. You can sort of see how it goes. Nature is a resilience issue. We need to have stronger nature to make sure it can survive. And in fact, the world is already at a crisis point. So we've got to strengthen all these things as part of a global resilience agenda. And that's what's going to the next taxonomy. It's already going into the Rwanda taxonomy, the Hong Kong taxonomy, and various other taxonomies around the world.
Gwen?
On the biodiversity taxonomy within the EU objectives, it's already embedded inside, and then it's also within the pollution and water objectives that are there. If you look at GBF, there are also some taxonomy in there. A more kind of synthesized version and how we're actually using this into products is, I think you mentioned this earlier, ICMA just came out with the nature guidance. And in there, they have it for use of proceeds for sustainability-linked bonds and then also for impact.
Frederick?
Biodiversity or nature, huge challenge, huge opportunity. We'll discuss it a lot at COP for sure, the 1.3 trillion and so on. There are, it's a big challenge for companies to know what to measure, what to report. So I think we're in the middle of it. Not because of the absence of catalogs and frameworks. We have probably too many of them, to be honest. And we are trying to probably make way to have something a bit more condensed and simpler for companies to use. It's typically a question we get is, so what is the metric I should put in my SLB? And that's a really simple question, very difficult answer. But just to give you a sign of hope, there was a really interesting transaction last year by Natura, for example, in an SLB using a KPI of bio-ingredients being sourced from the Amazon. And that's a company that has huge nature dependencies, and they packaged it into their product to use that narrative to raise funding that was very successful. So there are good case studies, but it's obviously a huge challenge and great topic for COP next week.
Great. Okay, I think we're coming up towards the end. I want to challenge the panel, the end game. And maybe we come back to, I'm sorry, I keep coming back to the Australian braai, the barbecue with the family. When you get asked by the person on the street, what is the end game here? What are we aiming for? One sentence answer, if you can try.
One sentence. I think it has to be mainstreaming. I think it's wonderful to scale this through use of proceeds, but this has to be the rules of how companies operate writ large without segregating their financing.
Our mission is more volumes with more impact. So we all know we need to accelerate. We need to have more real-world impact and not just classifying, instruments. So it's more volume with more impact. That's what we keep telling ourselves at the bank.
Good.
So for barbecues, when I tell people what I do, when I start talking to them, they normally go away and they say, I'm going to go get a drink or I'm going to go to the bathroom, see you later. But 3 words, scale, and how do we get there? Business case.
This is about how we run the planet. So yes, it's going to be mainstreamed. When we're finished with this, we will have much better tools available to us to make decisions on a day-to-day basis which are to do with the long term, not eviscerated by short-term ridiculous focus, which has infected our world. It will deal with the long term of our returns for asset owners. It'll deal with the long term of returns for our societies and our children. It'll deal with creating a world in 2050. And that's all the shopping list for the future is about.
Okay, mainstreaming, scale, essentially planetary scale, and planetary, responsive to planetary needs, if we can say that. With that, a big thank you. And Nathan mentioned earlier the Taxonomy Roadmap Initiative, and I believe the resources, there's a number of resources that are being released, which are available online. I'm looking for Margarita, where she is, but I think we can, it's available, Nathan, here. It's available online. You've heard reference to a lot of other very important resources today. Once again, as I mentioned, the young kid on the block, the Canadian taxonomy. Well, it's not that young, but it's at early stage. It's still a youngster. Developments like that can only develop based on learning from around the world. And so I think we all have to be working together, both very specifically in terms of developing interoperability, but also in terms of the sense of community and learning from each other, both at the regulatory level, but then also in terms of the role of the private sector and civil society in terms of feeding in, producing taxonomies towards achieving mainstreaming scale, planetary scale, and planetary uses. So with that, a huge thank you to Amruta, to Frederick, to Gwen, to Sean, and to everyone for being so patient today. Thank you. Now, I'm not sure if there's a barbecue out back, but over to you, Nathan.
Of course there is. Thank you, wonderful panel. All right, let's start our third so we can wrap up for the day. So this panel is called No Time to Delay, the Economic Imperative for Scaled Up Climate Finance and Action. And I'd like to introduce the moderator, Isabella Damaso-Maia, who is Sustainability and Investor Relations Manager for the Central Bank of Brazil. Would you like to introduce your panel, or shall I? I do it? Okay, please, make yourself comfortable. So we're very lucky to have Irene Heemskerk here, who is Counsel to the Executive Board of the European Central Bank, Hervé Dutel, who is Chief Sustainability Officer at BNP Paribas Americas, and we have Rodrigo Laura, Director of Climate Change and Decarbonisation for Vale. Thank you all for joining us.
Hi, everybody. Well, thank you very much. Good afternoon for everybody. Thank you very much to the organizers for having us here today. I see so many familiar faces. It's so good to be here. And as you can see, this panel today is not specifically about the taxonomy, which has been the main topic of this event, but definitely supports the crucial role of taxonomy when scaling up climate action. So our panel today is No Time to Delay, the economic imperatives for scale-up climate finance and action. So I have such distinguished panelists, and I do guarantee that we will have very interesting discussion as we have different perspectives today. Irene from ECB, the regulators, Hervé from the financial sector, BNP Paribas, and Rodrigo from Vale, from the real sector. So the idea today, we know that climate inaction is much more costly financially and economically than a proactive and coordinated efforts towards climate change. So, this is supported by multiple studies, including the ones carried out by NGFS. It has been already mentioned here today. NGFS, I'll just introduce briefly, Irene, is a network for greening the financial system. So it's a group of central banks and supervisors that got together willing to strengthen climate change into the financial system. And it works on a voluntary basis. It was created back in 2017 by 8 or 9 central banks, 8. And today we have more than 140 central banks and supervising making part of this. So, and the NGFS has many studies, many workflows, and one of them is about scenario analysis, where support this idea of how much cost we are adding if we not act now. So, so I think it's good to start up. Maybe Central Bank of Brazil and as well as the ECB, we are part of the NGFS. In fact, we are part of the steering committee of the NGFS. So just to set the stage, I will ask Irene to maybe explain what are the findings from these studies that we have, recent studies from the NGFS scenarios analysis.
Thank you so much, Isabella, and great to be here. I was at the first ever meeting of the NGFS in 2017, and then we're 8, so we could fit in a small meeting room. But when we have plenary meetings now, this arena would be too small even, right? And we have people coming. So if we're talking a lot about collaboration, convergence internationally, I think the central banks and supervisors are really contributing with that through the NGFS, really working together. And I think the true value is that we share practices and we also learn from each other and put out also our work to the outside world. So also making sure that all the analysis we do on the risk assessment, we share with others. And one of the flagship products is the NGFS climate scenarios. And we used to have the long-term scenarios. So those were telling us, okay, how will the world develop up to 2100, so a longer term, and we need to have these kind of forward-looking scenarios because we can't base ourselves on historical data, of course. So this is something that is really helpful to think, okay, how will the future look like if there's no transition? So we'll be facing really the increase of physical risk. If there is a transition, because of course the change of the economy will also impact could lead to financial risk if this is not done orderly. But the 2100, it's still a long term. So we decided, let's look shorter term. So in May, we issued the NGFS short-term scenarios up to 2030, so the coming 5 years. And the message is really, really clear. If we delay climate inaction, we'll also have an increase of economic losses. Well, this might not come as a surprise, but to have the fact-based scenarios backing that statement, I think this has really been crucial. And it's, of course, direct. So you see a transition risk emerging if there's all of a sudden a really an uptick in climate policies. So you see that especially hitting the high energy intensive sectors. And a physical risk, well, not to mention, this is also something that we really see developing. And it's not only useful, I think, for the NGFS, because also it's important for the financial markets itself. And I hear more and more financial markets applying these as well. What I think the NGFS scenarios do, well, the short term align much more with also the strategic horizon of financial institutions. Like the 5 years is much more aligned. So it can be much more useful. That's what I hear back from it. Two things I think the short-term scenarios provide. First, they provide financial metrics, so really that can be used for stress testing. And secondly, they have also more a sectoral level granularity, so you can see much more the concentration risk emerging for it. So I really hope that like the NGFS scenarios, it's the first time we've developed it, so we're also open for feedback and we're really trying to improve it going forward.
Okay, Irene, thank you for setting the stage. So my first question will start with you. So based on these findings from NGFS climate scenarios regarding economic and financial risk of delayed action, how should financial institutions incorporate these insights into stress testing and risk management frameworks?
Yeah, so I already alluded to that a bit in my previous answer. So really to see like this, how do you, it gives much more sectoral impact, and also the indicators can really be applied for climate stress testing. So I really hope, and the alignment with the horizon of this strategy, I think this really hopefully helps the financial sector to apply them and use them and give them insights where the risk will emerge. Oh, on what we're doing at the ECB, how we're doing it. Yeah, no, sure. So again, like the clear signal of the short-term scenarios is that it's really impacting already in the coming 5 years. So what we see for the physical risk side, if there's no mitigation action, the impact would be really big. So already by 2030, it could be 4.7% of European GDP affected, which is comparable with the impact of the global financial crisis. So it's not we're not talking about some light numbers here that we can ignore. That's only the physical risk. Like if there's no climate mitigating, the mitigating action, but also the transition risk, the delayed and really sudden implementation of transition policies can have supply side shocks. It can lead to higher inflation. It could hamper economic growth, and it could also hit financial markets. So those two, I think it's those, like the physical and the transition risk impacts really impacting us. But how are we preparing? Of course, we're also preparing our own. We're applying the climate scenarios in our own work, so to make sure that we're better prepared. We're also looking now, because you also always have these, the regular stress tests. So now we're working with the European Banking Authority and also all the national central banks and supervisors to put the climate stress test element in the regular stress test. And the third point here is that from the ECB side, we're leading the climate scenario work for the NGFS. So there we're also really trying to make sure that it has a wider impact, putting effort in that. So many ways to see how it can be better applied.
And as you has mentioned before, the work from NGFS is not only for the central banks or supervisors. It's available on our website, right, for use, general use, right? And so moving into the financial sector perspective, as a financial institution, Hervé, what types of climate-related risk are emerging most recently?
Trying again, yes. So just to link with what you just said, first of all, just to reiterate that indeed, given the forward-looking nature of climate risk, scenario analysis is the most appropriate. And so for us, BNP Paribas, certainly being in Europe and under the impulse of the ECB, but also the ACPR, which is the French banking supervisor, it's been a number of years that we've embedded scenario analysis to measure and evaluate this forward-looking risk. Now, what's interesting is that the past number of years, I would say, the focus was more on transition risk. But what we're seeing emerging over the last couple of years, I would say, and it was mentioned during the previous panel, but it's indeed the risk, the physical risk beyond transition risk, in a way, as it's clear, first of all, that we've most likely missed the target, the 1.5. So while mitigation is important, adaptation is too, because maybe it was a hope that we would not need adaptation 10 years ago, but now it's clear that if you don't worry about future resilience, hence if you don't adapt today or start adapting today, there is this second type of risk that is emerging. So I'll give you a few examples of the nature of those risks. In real estate, first of all, so not only about floods and sea level rise, but in France, for example, where unlike in the US, where I'm based, where many houses are built in wood, in France it's in stone. And with the change in climate, half of the houses in France are having cracks in the wall. So when you're a mortgage provider, it might be the type of things that you maybe you should maybe worry a little bit. Physical assets as well are threatened. Again, trying to give you examples in areas that we would not necessarily think. It's the railroad network. In France, SNCF is the state railway. And SNCF knows that when temperature goes above a high of 56 Celsius degrees, The rail are starting to dilate. As you know, we have a very extensive high-speed train network, and it becomes completely unsafe to run those trains during those peak temperatures during the summer, and it disrupts heavily the traffic. 2 summers ago, we registered a high of 52 Celsius degrees. So we're not that far. So the question is, what will we do? The Swiss, for example, I believe, have started to paint the rail in white because it has, with the albedo effect, but that's CapEx, okay? Beyond a anecdotal question, it is a true business problem for one of many of our large clients. The agriculture sector as well is, as you know, very subject to physical risk. The question is, we don't know exactly who or where it will strike. And the reality is that the farmers and agriculture in general is way under insured. So here again, not only you have to think about the potential impact, not only you have to not only you have to think about the potential physical hazards, not only you have to think about the potential economic impact or physical impact on your clients, but you also need to think about what type of protection they've put in place, be it adaptation, be it insurance, or whatever. And last, and I will close with this, another type of adaptation risk in some ways is it can be a liability risk. And here I'm thinking of the wildfires in California. We had a major one this year, but also one in 2018, subsequent to which PG&E, which is the major utility Pacific Gas and Electric, had to declare bankruptcy because they were deemed to be liable for some origins of those fires. So this is really an emerging risk. And the third, but I won't detail, Gwen earlier mentioned it, but nature and biodiversity also is some form of risk, but I would put after adaptation and resilience, which is really emerging as we speak.
Okay, thank you very much. So we've seen that many risks are rising from this climate change problem. So going to the real sector, Rodrigo, could you share with us how Vale is adapting its business model to address climate risk and size opportunity from the low carbon transition?
Absolutely. So first of all, thank you for having me here. It's a pleasure to be with you today. I think the best way to describe how do we see this, we see this as an opportunity. For sure, it's challenging because the world is tackling climate change and pursuing some goals, but we see this as an opportunity. Why? And to be very, very sharp here. First, we are in the very beginning of the value chain. For those who don't know, Vale is a mining company. As a mining company, we offer very high-grade materials. So iron ore basically can help the steelmaking to decarbonize. Again, for those who don't know, steelmaking value chain accounts for 89% of the global GHG emissions. We also provide what we call energy transition materials that are essential for the electrifying batteries, EVs, and so on. So climate change in a more broader perspective is quite connected with our strategy that are provide materials for this new world that all of us want to achieve. Being more specific about the mitigation and adaptation, I think on the mitigation side, for sure we have the goals, we're committed to net zero, but the key aspect for us is to help our value chain to decarbonize. Just to give you the size of the challenge, our scope 3 represents something around 98% of our emissions. So the steelmaking plus shipping. Being more focused on the steelmaking process, there's no way to decarbonize the heavy industry if not we are partnering with the clients to understand what are the best options that we can achieve together So we typically call we call mega hubs. Mega hubs are kind of facility when they put all the elements together. We look for a reliable and cheap source of energy, plus high-grade materials, plus a new ways to produce steel. So putting all this together is a way to enhance and push this agenda forward. We have a lot of other examples. I will give you one. Is after 20 years of R&D, we developed a new product that's called briquettes. Briquettes is a kind of agglomerate that use less energy. So it's 80% less intensive compared to other products. It helps the client, in this case, again, steelmaking producers, to decarbonize, reducing up to 10% in the blast furnaces. So this is the way that, and how do you connect the challenge with the opportunity? On the adaptation side, we are pre-exposed with the climate risks. So we developed a model that we call Valley Climate Forecast. Based on temperature scenarios, we tested all the most probable risks, such as flooding, fires, and so on, and try to identify which operations are more exposed to this, and for sure, what is the plan to mitigate it. So it's something that we included in our strategic planning, and now we're running and trying to bring some AI to try to connect the dots easily. So we're improving this analysis, but in the end of the day, the key aspect for me is how to reflect this into a financial decision. So, for instance, every single brownfield or greenfield project needs to comply with a lot of items, one of them climate scenarios, and how this connects with the emission reductions curve, how this connects with the carbon price taxation, and so on. So we are putting all these elements together to really change the way that, as the company see this opportunity or this challenging task, again, to push this agenda forward.
Great. So we have highlighted some risks as well as opportunities, right? So the next question is, as the risks are becoming more clear and opportunities are surging, what do we need? What is holding us back on how we unlock the capital for the transition? So Irene, I can get back to you. And my question is, what are the principal barriers that continue to hinder the mobilization of climate-related investments, in your opinion?
Thanks, Isabella. Well, there is a big finance need. That's clear. So already for Europe, for the green transition, we need 1.2 trillion a year on a yearly basis, only for the transition. So there is a big finance need that is clear. And of this 1.2 trillion, 2/3 needs to come from the private sector to make it happen. So how do we get that? I think you can call it challenges, or you can, what do we need to fix to get that? I think there are 3 points. So first, get the right environment in place to unlock this finance. And if we look at the European situation, most of it, what is mostly lacking is still the money that's coming from the capital markets. So really with the debt and equity finance, they really rank low in all the financing. So how do you unlock it? I think this capital market union, this integration, I think this is one key element. And with that comes, of course, also what we've been talking about today, taxonomy, data, and disclosure. I think these are really important things. Second thing I see is policy makers really need to set the right environment as well. Investment won't come if the green transition and also the regulatory framework is clouded by uncertainty. And that sometimes is still the case. If we roll back things now, or if we have a bit of a swappy tour horizon where we go to, I think, really clear policy targets, where we go, stick to it, and also make it executable. And the third point, I think it's still pricing and fiscal incentives. So still carbon pricing, making sure that targeted green subsidies, where are really the hard debate sectors that need to push to get that, to have more also blended finance instruments, and cutting down subsidies for fossil. So I think these 3 points on unlocking capital markets, really making sure that helps. The second point is this safe regulatory environment, and then also, right, the fiscal incentives and pricing it right. These are the 3 things that I would really see need to be fixed.
Thank you, Irene. So moving to you, Eve, what are the main challenges and opportunity for mobilizing private capital at scale? We have heard about scale is needed. We have heard about private capital as well, especially in emerging markets. How can institutions like your institution, BNP Paribas, make transition projects more investable?
So one has to understand what we mean by unlocking the capital markets or reaching the private capital markets. One has to understand who that investor is. And that investor is, for the most part, these investors are for the most part retail investors. Whether they are pensioners, with their money managed by large pension funds, whether they are small investors with their money being managed by the largest asset managers. At the end of the day, when we say we need to unlock the capital market, one has to understand what the consumer wants. And even with the best policies in the world, even with the best pricing incentives in the world, such as carbon, and I agree both of those are prerequisite, one needs to have the right product. Why? Because the investor I described wants a very manageable credit risk profile and wants liquidity. That type of investor will never invest as such in a forest conservation project in Brazil, in a coral reef conservation in Indonesia, or whatever you want, or a rhinoceros protection initiative in Africa. And not only that, but that investor wants to be able to pull back his or her money tomorrow if he or she needs it to buy a house or a car. Or a washing machine, by the way, because an investment can be as small as below $1,000. So we need to create the right product that has the right credit profile and that is liquid. And that's where banks come into play because we're in the business of risk transformation. And so I'll give you one example of a product, which is, by the way, a multi-stakeholder product. That one is called the outcome bond. So if you think of the spectrum, first of all, of impactful financial products, on one end you have blended finance, which is pretty complex, pretty bespoke, takes years to implement, a lot of false positives that never crystallize into a transaction. At the other hand, you have sustainable finance by the name of green bond, blue bonds, gender bonds, etc., which are basically financing that goes to very large corporations and which are doing very good things, elevating the bar, but it's not the small project that we're thinking of. Outcome bonds are somewhat hybrid to that. They're sitting kind of in the middle. How it works, just so we're all on the same page, it's a bond issued by a development bank, such as the World Bank, for example, so a very high credit issuer. And the investor agrees from the outset to forego 50% of the coupon, for instance, and that investor will receive those 50% of coupon over time if and only if a certain outcome is achieved. So for example, and those coupons are funding on day one a project developer, for example. So someone doing conservation, forest conservation, or reforestation in Brazil will receive those coupons, and if the trees are planted and the carbon credits monetized, and that's where typically you also have an off-taker, such as a large tech company that commits to buy those credits if and when delivered, then the coupons are repaid to the investor with a premium. So first of all, it's a multi. So first of all, it solves the problems I was mentioning at the beginning. First of all, it's a World Bank or whatever MDB bond, so you have a high credit risk. Secondly, only 50%. Only 50% of the coupon goes to the project developer. To have a $50 million of half coupons, if you wish, you can easily issue a $500 million bond. So you have liquidity, you have size, and that creates liquidity. And it's a win-win for everyone. First of all, the project developer gets money upfront, but it's like equity for the project developer. If the credits are not delivered, the developer doesn't have to reimburse the money. And this funding that the developer gets is around 7%, which is much better than venture capital. For the off-taker that has committed to buy the carbon credits, that off-taker doesn't have to outlay the funds on day one. It's only and if the carbon credits are delivered, so 5 years onwards. And finally, the investor is not taking outsized risk. The principal is basically not at risk, it's AAA. 50% of the coupon also are AAA. And you know, when BNP Paribas or whomever has structured the bond, the World Bank or someone else issues the bond, and a flagship tech company is also an off-taker, you can assume that strong due diligence has gone behind, and it's not an irrational investment for the retail investor. So that's an example how we can transform the risk, but one has to be clear that that risk has to be transformed for the parameters of the type of investors we are trying to reach, which has most of the money to be raised.
No, thank you very much. I think you bring a very important point, which is we have to sit together, understand each other's need, because we are in the same journey, chasing the same objectives, right? But in order to find the right solutions, we have to build the bridges in order to make the money flow and achieve the final goals that we have. So for you, Rodrigo, from the real sector, what are the main obstacles and incentives for private sector engagement in climate finance? How can public policy better support companies like Vale?
Yeah, it's a good question. How many time do you have? 6 hours to maybe to cover all the aspects, but seriously, I'll be brief, I swear. But I'd like to highlight maybe 2 examples, one of each points. And again, I think we can see these obstacles as an opportunity again, because we have a lot to do, and there's a lot of things that can be put in place, maybe with moderate efforts. Just to give one example, public purchases or clear mandates for green premiums or low-intensive carbon products can be a very interesting way to stimulate the demand side. So if a state, a subnational, national level, have a mandate to ask for less intensive iron ore, for instance, or green steel, or less intensive steel, you name it, is the way that we can mobilize funds to invest, to have a very, to pursue a positive NPV project, and then we can invest. So you can facilitate the final investment decision. On the other hand, regarding the opportunities, we have the role of corporates. Again, to put in place the offtake agreements. So if you have a clear mandate, offtakes can be a lever to stimulate, again, new projects or new initiatives. So that is something, it's not new, it happens all the time, but it's a very interesting way to, again, to bring more action to this agenda. So, I mean, it's difficult because in other colleagues already addressed it. The carbon market is important, the stable environment is important, and so on. Everything is important. But talking about the private sector, I think we already understood this, and the way that we see is how to bring new partners to this discussion, and to bring new partners to the discussion, we need a clear goal. And to clear goal, we need a clear way to achieve this goal in a very economic and feasible and doable way. So it's not about to have or not have a project, but if this project fits in our strategy, if so, if this project is positive, because if not, you don't make it, it's not gonna happen. So again, I'll stop here, but I think my key message is there's a lot of things that we can already put in place. It's not something I rather need to wait for the next years to achieve what we need to achieve.
Thanks. No, listening to Hervé and Roderigo, I think like you're giving great examples, like how do the banks and how do you really invest, and also what do you need. I think one of the key things, like the underlying problem is still like, what do we value? If you look worldwide, what are the highest value companies? Think about it, probably all tech. If they go bankrupt tomorrow, they'll be disruptive, right? But imagine if we don't have clean water anymore. This kills people in the end, right? So to also, how do we make sure that we value these kind of services that the planet gives us and makes our world a safe place? How do we make sure in the end that we properly value in all the financial markets around the world and in every financial decision we make? And how do we make sure that we preserve what we have lived by and that keeps us alive in the end and keeps our economy going, right? It's an economic incentive. If the planet heats, people have health problems, less productivity. So all these things, I think we still have to sometimes go back, and I love it that you see it, try to work it on the ground. But this whole systemic and macro perspective in the end, this is something we need to be more aware of. And at the European Central Bank, we're really trying to bring in that perspective, seeing, okay, how dependent is the European economy on kind of ecosystem services, we call it. Now we're looking into the risks. We see that water risk is really, really the highest at the moment. It's surface water scarcity, it's groundwater scarcity. It's also, and talking, Hervé, I heard during your first intervention, like mitigation, adaptation, nature maybe third. I think they should be together. Because when you see, because the third risk that we see is that also the buffer nature brings us for flood protection. That is one. And then the other one is water quality. So all the 4 water-related elements. So that's something, okay, how can we make sure that we preserve that kind of economic assets and value that right in every decision we make?
Just to precise, I totally agree on the parity of the 2 risks. The reason I put adaptation and resilience first right now is this one is better, the economics are better incorporated today than nature. I think there's a lag, unfortunately, because it's through the economics that we get the fix. But I agree in terms of size of risk.
Yes, Irene, what you're talking about is a new way of doing business, right? It's a new way of taking decision on investments. It's just when we reach a point where the impact of everything that we produce is inside the price, right? Yeah, and we are trying to, on like a building blocks, establish this new normal for the future, right? And we hope that it comes soon, very soon. But we know there's a cultural thing, and then we must include that in every way we think and do business. But it's quite interesting. So moving to the final block of our panel, we would like to talk more about the solutions, right? And we've had very, very interesting sessions about taxonomy. And we know that European taxonomy is a great example and leader on this development. In your perspectives, Irene, what role does it play, along with other taxonomies, in mobilizing capital? We have already heard that from previous panels. And how could similar frameworks support climate transition financing emerging markets and developing economies?
Thank you. Well, we have really the two experts on taxonomy sitting there, both of them, Nathan and Helena. But from my perspective, what I think the EU taxonomy really brought clarity to the market. And really, how do you channel finance to the right sources and what is sustainable or not? The second one, I think it's really crucial to monitor progress, really crucial. And there I also want to say, like, we're monitoring it, but it's still such a small part of all the financial flows that are going around. So how can we monitor progress? I think that's really key, and it's a great tool, and to see how we can make that better interoperable around the world, so we can also have the capital flows running to the countries that are also much in need for a lot of funding. That's you see with the emerging and developing economies. So that's one point, and maybe the last reflection I would have also on the taxonomy, making sure that, and we're really learning also from what we've done, starting to see, okay, what kind of lessons can we learn, what can we improve going forward, so really making it to work it together through with all stakeholders and making sure that it works on the ground, and that's what we're trying to do.
Thank you. Irv, you already shared example of solutions. Would you have any other to
Sure, so I'll give you two quick ones. So indeed, once you've defined the goals for taxonomies, you've defined the ways to measure, then you need the right products to channel those flows to achieve those goals. So I mentioned outcome bonds, but I'll give you two other examples. It's really a toolbox we're collectively developing, and we're kind of in the inflection points where those are not business as usual yet, but have demonstrated that they are really scalable. So one of them is called debt for nature swap, but it can be also for social issues like debt for education swaps. The whole idea is you start from an emerging market debt that is distressed. So if it's distressed, first of all, it's not the credit profile for the mainstream investors, and if it's distressed, it's obviously not liquid. So we restructure this debt with the help, for example, of a guarantee from a highly rated development bank. So all of a sudden you increase the credit profile. And there is a discount that is offered to the emerging country, so less burden going forward to repay that debt. But there is a string attached, which is the commitment of that country to achieve some sustainable goals, like, for example, marine preservation. So that's one example of a product. Another one is called SRTs, synthetic risk transfers. So here the whole idea is to basically buy back a portfolio of loans, could be from regional commercial banks in Latin America. So we buy back $1 billion of loans, but there is a string attached again. Those banks have to redeploy the freed capital into sustainable projects.
That's quite interesting. You probably have heard about the Eco-Invest program here in Brazil. It's something that was developed by the government to attract investments for sustainable initiatives, sustainable projects. And one of the key features of this program is to provide FX hedge for foreign investors. So historically, the volatility of the Brazilian real has been a major challenge for bringing international investments for long-term projects. And so the central bank is directly involved in that, working with the IDB in order to have assess this kind of derivatives in foreign markets and bring it to the financial institutions here that will provide the credit for financing projects, sustainable projects. So solutions like the ones that you have just mentioned and the others like this Eco-Invest are the type of things that we expect to be created, incentivized, right, to find the right way to make the flow funds to where we want or we need it to go in order to achieve our climate goals. Okay, Rodrigo, so going back to you, My final question would be, what, in your view, the role of blended finance and partnerships with financial institutions, how could that benefit the initiatives of Vale?
In our world, it's crucial. I mean, we have been developing a lot of mechanisms such agriculture receivable. I don't know how to translate it, to be honest. The CRA. Here is, I think, something around this. But, I mean, it's crucial. For those who don't know, we have a voluntary goal to achieve 500,000 hectares by 2030. Vale already has something around a million of hectares preserved around the world, 80,000 hectares in the Amazon region, and in 2019, we committed with this new goal. When we started, we thought about, well, we need to identify smart ways to achieve this goal of connecting people, financial institutions, private sector, and the answer at the time was there's no way to go. So we started a very robust process to create or to help to create this environment. Just to give you some numbers, at the time, I mean back in 2019, we evaluated something around 300 initiatives, selected 7, or selected, and we offer grants for 5 initiatives. After 5 years, we recovered something around 18,000 hectares using grants instance. So it's impossible to achieve the scale that we need using this kind of mechanisms, but again, grants or the philanthropic capital is important, but needs to be part of the discussion. It's not the only solution. So now we are partnering with financial sector to establish this new view on how to bring more, more financial or bring financial mechanisms to put it in place. Comparing this period, we already achieved from the beginning of this year till now 17,000 hectares. We already contracted, as we call. So the scale, it's possible. We are far from what we need to achieve, but we are doing good. But to your point, it's important, and we understand from our perspective, there's no way to achieve the goals without this kind of mechanisms. To give another example, and I'm conscious about the time, we are looking for biomethane solutions here in Brazil. There's no market. The supply is not so strong. So we rely on blended finance mechanisms, again, to help to create this market. So it's important, it's necessary, and again, it's doable. It's something that you know how to do it, so you need to do it to put things in place. So I'll stop here.
Thank you very much. Well, I think that we were able to bring very different perspectives on risks, on challenges, on solutions, and everything that we discussed here just highlights me how important it is to work together, to cooperate in order to achieve our goals. So on benefit of time, we will not open for questions from the audience, but I would like you to join me some applause for our panelists. Thank you very much.
You guys. So no more speech. I just want to say thank you to everyone on behalf of B3. I'm Virginia. I was really glad to have you today. I know the week was really busy for almost everyone, and you still have energy to stay here with us, paying attention. And the panelists, thank you for sharing the experience, all the things that you bring to Brazil. It was really nice to have this conversation with so many different jurisdictions. So thank you, everyone, and a round of applause for the organization too. Thank you.